We continue to watch that as we run towards the start of trading here in Europe.
Yeah, and that number coming out of iron ore likely to be a drag on the UK. The FTSE 100 futures currently a bit of an outlier, pointing lower by 0.2%. The DAX, though, just about in positive territory. Over in France, the CAC current looking to lose currently about 0.1%, Anna.
Okay, so things looking pretty flat, mixed on the European equity market futures picture. And actually, that's also better than just an hour ago, where things were looking a little bit more negative, but pretty flat then as we wait for that CPI print out of the United States. As we've been saying, that's the data point of the week, perhaps. But Mark was in the last hour actually downplaying how significant that's going to be, how game-changing that could be for markets. So we'll keep that in mind. Here's the start of the European equity trading session then. It's just taking a moment to get into gear this morning. The FTSE 100 down by 0.3%. The Spanish IBEX down 0.1% or so. Pretty calm on the FX column. We had a lot of really interesting insights from Mark last hour around EMFX, whether that's to do with the Indian rupee, Mark Cranfield on the Markets Live blog talking about that, whether it's to do with the Chilean peso and the links across the metals and commodities space back into EM, all of that really interesting. But not much happening on FX markets here in Europe right now. Sovereign bonds, then we see buying of sovereign debt. We see the yields coming down. A lot of that's at the short end. You can see the 2- and the 5-year tenors being represented. And there's the mixed picture we're seeing over in commodities. We do see a bit of upside. We have seen some upside in oil prices. We talked about that with Sophia a moment ago. But for the moment, the gas price is jumping just a touch. No big moves for that particular sector. And iron ore dropping off there. But we keep that in mind as we look at underperformance perhaps on the FTSE 100 this morning. The FTSE down 0.2% then, Tom. What do you see on sectors?
Yeah, and part of that drag coming through from basic resources as we've been flagging through the hour. Currently down 0.6% on softer iron ore. Iron ore prices falling for a 5th straight day. That is dragging on the miners. It's dragging on basic resources as a sector. And of course, that is dragging on the FTSE 100 where it's a major component. You were talking, Anna, about the energy sector. And despite the grind higher we've seen in prices, given the softer or at least the smaller inventories in the US and the geopolitical concerns over the Red Sea, as a sector, energy is currently down about 0.1%. Tech currently up just 0.1%. We think about TSMC and the relatively constructive sales numbers that have come out, at least over the last quarter. AI demand giving a bit of a lift, even as some of their clients work through continued inventories around smartphones and laptop chips. Currently across the banking space, and this was a sector that performed relatively well yesterday, down 0.4%. Another sector to flag in positive territory, consumer, currently up 0.3%. But again, my focus is really on what's happening with basic resources. Tech is interesting as well. Banks down 0.4% across the European benchmark, off by just 0.1%, Anna.
Okay, yeah, we'll keep an eye on the basic resources sector. Construction, actually the worst performing sector so far this morning. Here in Europe, early days, 2 minutes in. Let's talk to Sophia Horta-Acosta from the Markets Today blog about some of the themes they're dealing with on the blog today. And one of them that is really a global theme, focuses on the US, but it has global resonance, doesn't it? And that's around Bitcoin and whether we're going to see the SEC say yes to Bitcoin ETFs. We thought we'd seen it yesterday, turned out to be a hack, but now we wait for the real decision.
We do, so that's expected later today, at least that's the deadline later today. I mean, I think the irony wasn't lost on the crypto faithful who, you know, the fact that the SEC and SEC Chair Gary Gensler has really pushed hard against the online cyber risks of cryptocurrency, that their account was hacked by in a cybersecurity incident yesterday. I don't think the irony was lost in the crypto world yesterday. But, really, the price of Bitcoin actually rose on the decision. It shows that how much is kind of riding on this. This would bring in, it's a spot ETF, so it's backed by actual Bitcoin. It would bring in more, established money into the system. Again, bring Bitcoin, which is supposed to be outside the financial system, into the financial system. BlackRock and Fidelity are some of the issuers that have applied for this. But there's a lot of speculation around this, as we saw in the reaction to the cyber hack yesterday. But I think the SEC did not look particularly good in this incident.
Yeah, it's also kind of one of those wake-up moments where you think, hang on a second, we just kind of sleptwalked to this point where the SEC is releasing these really important decisions on X, a social media platform, but we've just kind of accepted that that's the norm now, not just for the SEC, but other government departments as well. So we think about that, and the decision is expected at some point, if not today, later, the official and actual decision. Meanwhile, UK politics, big year, of course, we're likely to get an election at some point this year. And the focus in terms of UK importance, where voters want to see action, not necessarily on the tax cuts that some in the Tory party are pushing for, but on better services.
So this is a new survey, not a huge survey, around 2,000 people, 2,000 adults were surveyed by a political consultancy, Global Council, and this was conducted in December. But the surprise here is that the priority is not on tax cuts. So it's really on improving the services used to improve. People want any available fiscal headroom to be used to improve schools, hospitals, and this is a problem for Rishi Sunak and the Conservative Party because this is not where the focus has been. It also kind of ties in to the reaction we saw after Jeremy Hunt's autumn statement, where he did, surprisingly hand over a few tax cuts, and he's expected to do that again in the spring statement. That more than half of Brits thought that this would make no real difference to their financial situation. So if the Labour Party is focusing on, perhaps the thing that the voters actually want, this, is a problem for the strategy of the Conservative Party. It'll be interesting to see if they can pivot that.
Yeah, as Rishi Sunak tries to align perhaps what the country wants to see and what his backbenchers want to see. Let's think about how all this plays out in bond markets, because if governments spend more, then sometimes they raise taxes and sometimes they get into debt to do it. And the gilt market has been in focus. Yesterday we were carrying some comments by one gilt watcher, gilt investor, who was raising a few alarm bells. What's the story out of Federated Hermes today?
So this is, I think, one debate that we're having a lot on the blog right now. What's the biggest narrative for gilts this year? Is it inflation? Is it the election? When does the election actually feed through? So Federated Hermes, this is one of the calls, is that, betting on the UK bond market last year was a pretty good bet for Federated Hermes. Now, Orla Garvey, she's their senior fixed income portfolio manager. She's saying the firm is cutting back on gilts, taking profit, because the picture is not so clear right now. We do get inflation numbers due soon. The BOE continues to push back against market pricing for interest rate cuts this year. And it's the investment case, she says, looks less convincing than it did at the end of 2023. I think that what's dominating the gilt market right now is still inflation and what that means for the BOE, the election and the story around that, and the fiscal story, the tax cuts. That will be kind of maybe a second half of the year story.
Okay, currently 2-year gilts trading at 4.21. Not a lot of movement in gilts so far in the session. Early doors, of course. Sophia Horta-Icosta, thank you very much indeed for walking through some of the key themes of the day. You can get more from the team, Sophia and the team, on the front page of the Bloomberg UK website, or by typing TLIV GO on the terminal. Coming up, Britain's second largest grocer, Sainsbury's, drops after reporting Christmas food sales, which failed to lift its profit forecast. Currently, that stock down 3.4%. We look at your stocks on the move in the next couple of minutes. Stay with us. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crime ever. I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
What does it take to be a great surgeon?
This may sound trite. Perseverance, resilience, in practical terms, being able to take a blow and not having it become a permanent deformity, and grit.
Welcome back. This is Markets Today. 10 minutes into a trading session here in Europe that looks broadly negative, down around 0.2% on the stock 600. Let's check in on some of the individual movers, though. Joe Easton joins us for the briefing. Joe.
So we got a big move lower in Campari over in Milan. The maker of Aperol Spritz raising 1.2 billion euros to finance their Courvoisier takeover that they announced last month. A lot of that is through discounted shares, priced at around 9.33 a piece. So it's coming down to that level, down 6% in Milan. We've also brought up Royal Unibrew in the drink space. This is a Danish brewery. It does make Heineken in Denmark. It sells that over there. But Jefferies cutting that one today, saying that that stock is overpriced and they haven't managed to reduce their leverage as much, questioning their buyback capability. And Sainsbury's, the big UK grocer, dropping 3.4% at the moment in London. Weakness at Argos, weakness in clothing, and a lack of guidance upgrade. It's what's disappointing analysts, despite a 9% rise in grocery sales this morning. Greggs, meanwhile, jumping 8%. Apparently, they're doing a chocolate orange muffin. They did that over Christmas. We were discussing that in the break. It did really well. So Greggs on a roll. I'm told that is a very bad pun, but I don't think it's beneath me, so I'll go with that one. They are reporting strong sales, though, 19% growth in their sales in the last quarter for Greggs, and that did include the key Christmas period. So pretty good for them, pretty good for both the Greggs there. And also we've got NN Group. We had that one in stocks to watch, jumping following this insurance ruling. They have settled a dispute over claims that some of the conditions of their life insurance was unfair. More than $200 million they're paying out to settle that. So we're seeing it up 3.9% in Amsterdam. Persimmon finally seeing an increase in sales in the last quarter. They've said that in a statement today. They're saying they're already seeing the impact of lowering mortgage rates. That's feeding through into some of their orders, according to them. An early signal, perhaps, of a rebound in the UK property space today. And a couple of building stocks to note. Sika booking an impairment charge. This is over in Switzerland, and also some weakness in the US more broadly. They do applications in the building space, lots of parts that go to construction suppliers. Weakness in the US, and another impairment down for Skanska. This is an HS2 supplier like Balfour Beatty in the UK. We're seeing Balfour down as well. A bit of a read across from those two updates from the construction sector today. Finally, a couple of the pharmaceutical stocks at the top here. Dossier, this one postponing their interim results, according to a statement today. There's some concern around their capital issues. That's over in Switzerland. Alcon, this is eye care. They've announced some positive drug trial data this morning. That one rising 5% in Switzerland. And a couple of chip stocks to note. BE Semi comes down Over at Deutsche Bank, they've got a sell rating on that one. They say that some of the recovery prospects are overhyped. And AMS Osram, this one upgraded at Barclays, thinks the sell-off in that one has been overdone. We've also had those TSMC results. I believe you're going to discuss chips more at the moment, but a couple of mixed movers in the chip space today.
Joe Easton, yeah, there's the handoff. Thank you very much indeed from our equities team. We will indeed, by staying on the semiconductor space, broadening it out as well, to look more broadly at tech as we push into 2024. Staying with that story then, Qualcomm's CEO saying the company's push into the auto sector is on track to beat sales projections. It had previously targeted revenue for the unit of around $4 billion by 2026. Speaking to us in Las Vegas, Cristiano Amon says he's also optimistic about the growing role for mobile AI.
I'm believing the next user experience is going to be based on Gen AI on the phones, and we're optimistic that we could start to see devices as early as this year with those capabilities. Okay.
Arm CEO Rene Haas was also at the CES conference in Vegas. He says it's too early to predict how AI will transform smartphones.
I think it's still early days in terms of what are the applications that are going to be really killer for the smartphones. The hardware is enabled now, so you have capability now inside the smartphone that can run these AI algorithms. But for example, two areas that people really care about are latency and privacy.
Okay, joining us now with more on all things tech is Richard Clode, Portfolio Manager on the Global Technology Leaders team at Janus Henderson Investors. Richard, good morning. Thanks for being with us this morning. Let's start on the AI question then, and how you're thinking about investing around the cycle. Where are we in this AI adoption cycle, Richard, and which parts, which segments of the AI space do you want to be investing in at this point in the cycle?
Well, good morning. I still think we're very early in this. I think we've got to remember there was just over a year ago that ChatGPT actually launched. And we're only just talking about putting AI capabilities into smartphones, into PCs, which Intel was also talking about at CES. So, at the moment we've seen, a huge investment in training infrastructure, and that's obviously why NVIDIA was so strong last year. We're starting to see the first rollout of, some of the software and apps, taking Gen AI capabilities in there. We saw Microsoft Copilot, Adobe Firefly, and that's the scaling out that we're going to see this year. So we pivoted a little bit more into the AI inferencing side, which is, very much as you use these Gen AI services. You saw AMD at their December event talk about a $400 billion TAM, only 6 months after saying the TAM would be $150 billion, which gives you a sizing and how quickly this market is moving forward.
Good morning to you, Richard. How do you discern the real opportunities away from the hype? And in your notes, and other guests on the program have also talked about this. You go back to the dot-com bubble, and every company had a website, and every company that had a website that tried to claim that there was some sort of new internet stock. How do you stop the same happening with the AI hype?
And that's a very good question, because we certainly see plenty of that at the moment. Any company that's going to use Gen AI in any possible way is going to be a beneficiary, which very much draws parallels to that dot-com bubble where you had a website and you were going to be a beneficiary from the internet. I think we're trying to learn some lessons from how the internet played out. This certainly isn't going to be linear. I think there are some differences to that, in that we have the mobile cloud that's been built out over the last, 10 to 15 years. And so these Gen AI services can scale very quickly. You will see this in, all Microsoft offerings very quickly. You will see this in pretty much every app you use on your iPhone very quickly. So I think the way that this technology is going to proliferate will be very much enabled by a lot of the technologies we've been putting in place over the last decade. But, what's truly going to provide the value add and productivity gains that's just going to justify a lot of this spending? And I think, that's going to be the true acid test over the next sort of 18 to 24 months. That are these companies truly delivering on the promises of Gen AI? If they are, they will continue to spend, and their customers will continue to spend.
Richard, on a regional basis, does the gravitational pull remain with the US when it comes to the developments in AI and how you want to get exposure to that? Or if you have a prism that focuses on Europe, are there some names, or at least are there some players that can pick up some of the upside?
Yeah, I think with every new technology, we do tend to find the innovation is led by the US and by Silicon Valley. And I think even more so given some of the chip restrictions we've seen from the US, on places like China and even the Middle East sort of more recently. But, that's not to denigrate some of the capabilities we have here, sat here in the UK and London, with, huge R&D centers for some of the big US internet companies, DeepMind, there's some great, talent and IP here as well. You were talking to ARM CEO as well. And you mentioned, just Joe was mentioning, BESI, which, BESI is a key leader in hybrid bonding. And hybrid bonding is the key enabling technology for AMD's new chip, the MI300, which is the key driver of their $2 billion plus of AI inferencing revenues they're expecting this year.
Tell me about your expectations for China tech. You say in your notes, Richard, that you've obviously been, you've been a tech investor for a long time. You've also been a China tech investor for some 20 years. What is the relationship between Chinese tech stocks?
Cost is certainly the word of late. Look, I first went to China to look at technology companies in 2004. And, I think through my entire time in China, we've seen just an increasing bifurcation of the technology sector. That started with the internet, and that's why the major US internet companies aren't present in China. And now we're seeing the entire technology industry kind of bifurcate. That's already happened pretty much in smartphones outside of Apple, but we're now seeing that across semiconductors and pretty much everything else. And that just creates a lot of complexity. Now that creates risks, and we've seen that with Huawei. We've seen that with some of the chip restrictions, but it also creates opportunities. I think China at the moment is just struggling with that top-down issue that, until we get more comfortable with that, the top-down, the property sector, the economy there, then, the global investors aren't really going to be rushing back to invest. And just given some of those restrictions, there are not that many AI stocks you can be playing in China currently either.
Just very briefly, Richard, where do you think we are in terms of the inventory cycle, the chip cycle? Do you have confidence that we bottom now?
I think it's hard to talk about that in aggregate for the semiconductor industry. I think, PCs and smartphones went in first, and so they're coming out first. The same with memory. We've seen, with the Mobileye profit warning just at the turn of the year that, autos is kind of the furthest, the furthest that's seen the longest, lack of inventory destocking. And so that's just happening now. And we're seeing a little bit with analog too, with the Microchip profit warning as well. So, they're very different cycles, but most of them are now coming out of that inventory nasty destocking cycle last year.
Richard, thank you very much. Thanks for your thoughts. Richard Clode, Portfolio Manager at Janus Henderson Investors. More on the markets coming up. This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good
morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Welcome back. The CEO of the world's largest cosmetics company, L'Oreal, says travel retail will recover progressively over 2024. Nicholas Hieronymus spoke exclusively with Bloomberg's Ed Ludlow at the CES show in Las Vegas.
The problem is that you've got so many choices in beauty, so using technology and our knowledge of beauty combined to help consumers make the best educated choices is the best way to increase their satisfaction and loyalty. I'll give you the example of the diagnosis. We're talking about Metaprofiler. When you're in a counter and you're giving advice to a consumer, if you just chit-chat and have a man or woman-to-woman advice, conversion rate is 9%. So 9% of women will buy something.
In terms of a sales conversion,
yeah.
Right?
When you do it with this type of tool, like Metaprofiler, it goes up to 73%. So you can see that it's not just how much Metaprofilers we're going to be selling. Actually, we're not selling this one, but it's how much products and how much satisfaction will generate through its usage. Of course, we have high ambitions for this Airlight Pro product in combination with L'Oreal Professional, but it's too early to tell in terms of dollars.
It is a great pleasure to be with you here in Las Vegas. You have flown in, I have flown in, and people from all around the world have flown in. So I want to ask you about the travel retail market. You know, there was softness towards the end of last year. What signs are you seeing about that business line in the new year?
Well, I think there are two sides to this story. On the one hand, there's the travel retail overall. I think it remains a fantastic business. People are traveling again, and travel retail has always been and will remain a fantastic showcase for our brands. Many consumers actually discover our brands when they are in these airports, and they are very valuable customers. What's been happening over the last couple of months or last year is a reset of the Asian travel retail market with changes of practices, and that has affected the sales to consumers and the sales of this market. I think this is going to be getting better progressively over the 2024 year, and probably the second half of 2024, which should be very good for travel retail.
The European Union and China are in talks in working groups. The issue that was identified for your industry, beauty, was that China wanted disclosures about the composition of the goods you want to sell in that market, and there was concern about the volume of data that you have to hand over. Where are we at in that process?
Well, first of all, I have to, reaffirm my total confidence in the future of the Chinese market. It will remain a very important source of growth for L'Oreal and for the beauty market, because middle classes are going to be increasing. So we continue to invest in the Chinese market, and then there are rules on this market that you have to respect. And I think today we managed to respect the Chinese regulations without disclosing all the secrets of our recipes, which make us the #1 beauty company in the world.
Okay, Bloomberg's Ed Ludlow speaking to the CEO of L'Oreal there. Coming up, the CEO of HSBC, Innovation Banking, formerly Silicon Valley Bank UK, makes the positive case for UK venture capital. That is next. This is Bloomberg.
just looking at your portfolio of businesses, it is about resilience. It's about pressure. It's about women. Like, so how does that come together how does it manifest in the deals that you're doing now?
Yeah, it's one of the things that I became increasingly passionate about after I retired, was acknowledging the fact that focus and this performance mindset was a huge asset that I had gained and that I had worked on and perfected for over 20 years. And now working through brands and founders, I just recently announced a collaboration with the Amman Hotel Group, where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this first chapter, right? But how do they now apply to everything else I'm doing? And I'm so curious and interested in how I can bring that to the audience now and make it more mainstream and accessible.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Bloomberg. This is Markets Today. We're 30 minutes into the European trading day. Here are your top stories. European equities edge lower and US futures are muted as traders await tomorrow's US inflation print for clues about the path of Fed rate cuts. Sainsbury's shares slide as higher holiday food sales at the UK retailer are offset by weakness in clothing and other merchandise. Plus, Houthi rebels carry out one of their largest drone and missile attacks on commercial ships in the Red Sea, prompting action from US and UK warships in the critical sea route.
Okay, we check in on your markets. The European Stock 600, the benchmark is currently down a little under 0.2%, a bit of a muted session. Again, as we look ahead to that inflation print out of the US, which, as we said, could be consequential in terms of thinking about where the Fed goes, how aggressively they may be planning to cut for the rest of the year. Currently across the Treasury curve, just worth noting, yields coming in just between 1 to close to 2 basis points, 4.35 on the front end, the 10-year holding just above that 4% level. Here's the picture then on an index-by-index level. The FTSE 100 is a bit of an outlier given the pressure that's coming through across the basic resources space. The FTSE 100 currently down. You're seeing modest optimism coming through for the German DAX, and the CAC 40 over in France is flat. But here in the UK, FTSE 100 is down 0.2%. On a sector-by-sector basis, the pressure coming through then for the personal care space, that currently down as a sector, down 0.5%. Basic resources, as we touched on, so the weighting coming through for the miners, currently that down at 0.5%. Iron ore prices falling for a fifth straight day on concerns about Chinese demand. Top of the list across your sectors, real estate punching through with gains of 0.7%. Autos grinding higher as well, up just 0.3%. And that's a sector by sector look. We focus on technology now and the appetite for putting money to play in 2024. HSBC Innovation Banking says 2024 could be a year of recovery for UK venture capital. The HSBC division includes the former Silicon Valley Bank UK, which was acquired for just £1 after US regulators shut down its parent company in March of 2023. We last spoke to the CEO, Erin Platts, following the launch of HSBC Innovation Banking in June. Very pleased to say she joins us now in the studio for an update, Erin. And we do want to get that update in terms of the integration of the business into HSBC, of the former assets of Silicon Valley into Silicon Valley Bank into HSBC. But before we get there, let's start with the top line of the report then. You see a relatively optimistic picture when it comes to venture capital in 2024 after, frankly, a challenging year for 2023.
Absolutely. Well, good morning. Thanks for having me. I think it's been a challenging couple of years, actually, for the UK innovation economy, but The top level highlights from the report that's come out of Deal Room and HSBC Innovation Banking is, I do think we have reasons to be optimistic for 2024. And that's based on really two main drivers. The first is how much money the venture capital community is raising within the UK and broader Europe. That's been 6.6 billion last year, and that's been over 25 billion for the last 3 years combined. The other indication is where is this money going and how quickly? And if you look at 2023, 21 billion was deployed into the UK, but most importantly, the first half of the year versus second half of the year deployment, we're up over 40% from second half to first half. So I think we're starting to see that unlock in terms of VC money going into the sector, which gives me a hope that we're starting to get to that new normal run rate, that $20 billion plus year in the UK.
You also say, good morning to you, Erin, you also say that VCs have plenty of dry powder, and some may be evident in the stats you were just talking about there, that they've invested some, but there's still more money that they could invest. So what's the next catalyst needed, do you think, to allow VCs to put more of their money to work?
I think it's a couple of different factors. So the good news is there's money on the sidelines today, and that's just a UK stat that I shared. I think we should also remain conscious that the UK is a really attractive place for international investors. So I do anticipate we'll see more money coming through from the US. A number of US venture funds continue to put feet on the ground in the UK and Europe. And then, you know, of course, the macroeconomic factors do play a part in our industry. So as we see rates starting to come down, that will be yet another driver. And then perhaps we'll talk about the public markets later as well.
Yeah, and of course, you talk about the macroeconomic picture, and of course, the higher rates environment was crucial and central to the turmoil that we saw across the banking space last year. You were at the forefront of that. You had to navigate that, and as we said, you ended up working through and pulling SVB UK into the arms of HSBC. Where are we? Give us a progress report. Where are we in that integration? You done and dusted, or is there more work to be done?
Yeah,
what does that look like?
Absolutely. So it's been a hugely busy 9 months. I'm very pleased to say that the integration is complete. The team has been extremely hard at work, but we are starting the year off in a really positive place. Integration's done, transition's done, which is a lot of work, especially when you're merging two banks together. But from an HSBC innovation perspective, both in the UK and also the global teams that we've since brought on board since June launch, we are out in market and we're back to business.
What was the biggest challenge about the integration, Erin? Was it technology? Was it culture? Both of those often hard. What was difficult?
I think it's the sheer amount of technology integration to bring two banks together in a short period of time was probably the hardest part, and wanting to also take really good care of our clients and team and continue to grow while you're doing that integration as well. So I would say that's probably the toughest spot.
Part of it presumably about maintaining and retaining the clients that SVB had.
Exactly.
Have you been able to build on that client base? Have you seen growth there?
Absolutely. Q4 was actually the strongest quarter of new client acquisition that we've had even before acquisition. So again, I think that's two things. That's the market saying combination of tech expertise and stability and breadth of HSBC platform, and some of the tailwinds that we're starting to see from the market have converged into a really solid Q4 for us, and I'm hopeful that continues in 24.
Is HSBC having to do anything differently now in the next wave of trying to attract clients within this particular sector? Are you changing the business at all since the integration of SVB?
I think I would say we're not changing, we're evolving, right? We now have more tools available being part of this amazing HSBC platform globally that we need to bring to bear, whether that's investment banking, private banking and wealth, asset management. So our job is to bring all of that to the innovation economy. Now, we also need to remember, post the events last March, that this is a really dislocated environment, right, for banking and lending and supporting innovation businesses globally. So I think all of the banks, the funds, the sources of capital participating in this space need to continue to up their game.
Do you think we see a turnaround in the capital market activity this year? The IPO pipeline, is it starting to? It was dry. It was essentially empty last year. Is it likely to come back in 2024?
I think so. There's the UK lens, then there's the global lens. So we've got 63, private unicorns left in the UK that are, I think, there's a good handful that are IPO candidates for 24. I don't think we're going to see much activity before Q4. I think we're predominantly going to see activity in the US, and that will follow into the UK. For me, the first 6 to 9 months of the year is going to be really M&A driven. We still need to see some consolidation in this space. I'm hopeful we'll see a little bit of untightening later this year, But for me, my money's on 25 being the most active.
And if we do see listings, then, Erin, I mean, will they list in the UK? What's the conversation like when you're talking to tech businesses who might be tempted to go to the US, of course?
Yeah, you know, that trend has been persistent for the last 20 years. I do not think we were going to see a step change in 2024. Now, the good news is we're having all of the right conversations as an industry to make sure that the UK is the most attractive place to list for UK businesses. I don't think we're there. So I do think we will
What's missing on that?
So I think it's a combination of factors. So there's been a huge amount of work. The Mansion House reforms is a great example. So I think we know what we need to do. So now it's implementing some of the reg change, some of the culture change, and unlocking some of the pension capital to go into the space as well.
Just briefly before you let you go on valuations, particularly within fintech, taking a bit of a hit last year. Are we bottoming on valuations within fintech? As a big component for the UK? Is that starting to turn around?
Yeah, I think so. Fintech's a really broad chart. So you're looking at the subsectors within fintech. I think we are starting to see the bottom with respect to more of the enterprise-driven fintech. I think there's still some perhaps recalibration that's needed in more of the B2C or direct-to-consumer, some of the payments businesses as well. I do think we'll see growth in 24 in fintech.
Erin, thanks very much. Thanks for your time. Erin Platt, CEO of HSBC Innovation Banking UK. So lots to think about when it comes to the tech space. We've had a number of tech conversations this morning. Let's talk about the auto space. Mercedes-Benz is about to deliver the first cars equipped with its automated driving technology, Drive Pilot. The company's CTO, Chief Technology Officer, has described it as a game changer. Speaking to Bloomberg's Ed Ludlow on the sidelines of the CES event taking place in Las Vegas, Marcus Schaefer admitted consumers still need to be made aware of its features and its limitations.
So now we're starting in the market here in Nevada and in California. Customers will receive the first cars, and the interest is absolutely high. But this is a game changer. This is an absolute new technology.
Game changer for revenue as well as technology? Will you make any money from it?
Technologically, it's a game changer because responsibility moving from level 2 cars to level 3 cars changes from the driver to the vehicle. And that's a fundamental paradigm shift that is happening here, supported by technology. So there's LiDAR technology in the car, cameras, radars, a software stack, an intelligent software stack, and extensive work with the authorities here in the US to get it certified. So it's a huge technology stack and package that we're offering the customers here, with the benefit that you are enabled to perform side activities while you're driving. So eyes off the road and hands off the steering wheel for the first time.
Right.
This is the only vehicle in the market so far.
You raise a good point on certification. A big news story of the last week has been the recall, in name only, of all Tesla vehicles on autopilot in China. And the regulator said you need to do more to get the driver focused on the road, more alerts. Do you think you'll avoid a soft recall like that? Are you confident that once Drive Pilot is rolled out here in the United States and later China, that it will just be able to exist in the marketplace?
Yeah, I believe you can never rule out that you are running into a recall. But on the other hand, we're doing everything in the 4 fields to avoid this and making sure this is a reliable system. So the extensive work with authorities over a couple of years with DMV, NHTSA, and many authorities in the country to explain the system to them and the boundaries of the system, what the system can do and what the system cannot do, is so essential, and to explain it in detail also to the customer. So it's an education process that has happened over the last 2 years, 3 years in the country here, making sure customers and the legislator understand the boundaries of the system here.
That was the Mercedes CTO Marcus Schaefer speaking to Bloomberg's Ed Ludlow at the CES event in Las Vegas. Coming up on the programme, we'll bring you the latest lines from Anthony Blinken's tour of the Middle East as Houthi rebels launch one of their largest missile and drone attacks in the Red Sea. More on that next. This is Bloomberg.
the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point, what is the lesson or the observation?
Connection lost. Welcome back, 8:45 here in London. This is Bloomberg Markets Today. Now, into geopolitical news, U.S. Central Command says Houthis launched a complex attack in the southern Red Sea on January 9th toward international shipping lanes. According to a post on X, there were no injuries or damage reported from the strikes, which occurred where dozens of merchant vessels were traveling. U.S. and U.K. forces shot down 18 attack UAVs, 2 anti-ship cruise missiles, and an anti-ship ballistic missile. Let's get more then. Bloomberg's Paul Wallace joins us. It sounds as if it's been a busy 24 hours. In terms of these attacks that we've seen then, Paul, missiles, drones, a barrage of attacks in the Red Sea. Bring us up to speed.
Hi, Anna. Yes, so this was the largest and the most aggressive attack, shipping attack from the Houthis since the Israel-Hamas war started. As you mentioned, there was a barrage of missiles and drones fired at ships, and this forced the US and the UK navies to intercept them by shooting them down. We don't know which ships exactly were targeted, whether it was the warships, US and British warships themselves that were attacked, or whether it was commercial vessels. But I think what this does show is that the Houthis are living up to their statements that they will not back down. They've been warned again and again by the US and by others that there will be consequences if they carry on with these shipping attacks. We have reported that the US is mulling military action on Yemen, where the Houthis are based. But so far, the Houthis are carrying on, and they have said that they won't step back until Israel pulls back from Gaza and stops its war against Hamas in the territory.
So, Paul, what is next? Is it military action? Is it a military response directly on Yemen territory by the US and its allies? What are you watching for, and how has the market responded?
It's certainly possible that we see military action of some kind, most likely led by the US, perhaps with some allies like the UK, on Yemeni targets. But there are a whole host of problems with that. It's a big question as to whether strikes such as those would be at all effective. Yemen is a huge area. The Houthis fire missiles and drones from big swathes of it. It's not like they're operating from a very small piece of land. We don't know how good US intelligence is on Houthi positions. They've been trained by Iran and others for a long time in doing this so that they avoid detection and so on and so forth. The other thing, and this is a big issue for Saudi Arabia and other governments in the region, and even the US, to be frank, is that you could provoke the Houthis into even more aggressive action. Perhaps they might strike Saudi Arabian targets like they have done in the past, which would really roil oil markets. So there is actually an argument among some Western militaries that actually just hold off for now, try the diplomatic route, because the last thing you want to do is really poke the Houthis into doing something that spooks global energy markets.
And thinking, Paul, about diplomacy and diplomatic efforts, Anthony Blinken is still in the region, at the West Bank, I think, today. Tell us what we expect.
So much of his trip, and it's another whirlwind tour for him. He's been to everywhere from Qatar to Saudi Arabia to the UAE. As you mentioned, he's in the West Bank today. He was in Tel Aviv yesterday, Egypt tomorrow. He has been trying to speak to Arab allies to reassure them that the U.S. is putting pressure on Israel to do whatever it can to stop civilian deaths in Gaza. But I think he's also putting pressure on Arab governments to do whatever they can to ensure the conflict doesn't escalate much from here, and certainly that it doesn't. That they do whatever they can to stop Iranian proxies, whether it's Hezbollah in Lebanon or the Houthis from attacking Israel and from attacking commercial shipping. In all honesty, so far his trip doesn't seem to have produced much in the way of progress. We'll see what comes out of the trip to the West Bank today and Egypt tomorrow. A lot of that from those two territories is probably about getting more aid into Gaza. That's something that Arab countries are very adamant. They say that must happen. But as Blinken himself said on Sunday, we're at a perilous moment in the Middle East.
Okay, Bloomberg's Paul Wallace with the update there out of Dubai. Thank you very much indeed. Coming up over the next few weeks, governments from the US, UK and Euro area will start flooding the market with bonds at a speed rarely seen before. We get more on today's Big Take. That is next. This is Bloomberg.
So Fabien, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food. It gives us jobs. It gives us, of course, oxygen. We're taking too many fish out. We're polluting it. We're making it warmer. And only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance. Our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to Markets Today. Now, over the next few weeks, governments from the US, UK and Euro area will start flooding the market with bonds at a speed rarely seen before. These countries, along with Japan, will sell an estimated net $2.1 trillion of new bonds to finance their 2024 spending plans. That's the topic of today's Big Take. It's a deep dive into bond markets and the supply story surrounding them. Let's discuss that and other market moves with Ven Ram from the Markets Live team, who can give us his insights. Ven, let's start with the big supply story. It was a big theme of 2023, wasn't it? Certainly when we saw the long end of the Treasury curve moving on supply fears. And now it seems to be developing into something of a theme at the start of 2024. Are you hearing a lot of talk about this as something that's really going to be guiding Treasuries and other bond markets?
Morning, Anna. It definitely is a point of discussion for the markets, and I think it is going to impact on rates as we go into the first quarter. But beyond then, it's hard to see how this is going to impact on market pricing. Why do I say that? Because issuance is supposed to increase 7%. If you assume that the major economies are going to grow 2 to 3% this year, particularly the US, and if you work in inflation of about 3%, that is more or less in terms of the nominal growth of the economies. So that kind of supply is large, but is not disproportionately large is the point. And I think that the markets are well placed to absorb those kind of flows. Particularly, pension funds are always looking for fresh issuance, and they can lock in the highest yields in so many years if they did so now. So I don't think this is going to be a major problem for the markets.
Okay, really interesting. So that record level of issuance around $2 trillion US dollars, but the market well placed to absorb that. The view there from you, Ven. When it comes to Japan, it's been a big story, of course, today. When you look at the performance of the equity markets in Japan, rallying again to above a kind of 3-decade high. But part of that is a yen story as well, softer yen, and part of that is linked to the wage data out of Japan. Tie that all together for us.
Absolutely, Tom. So, the headline data out of the wages data from the wages report that we got this morning is a bit misleading because, nominal growth was barely anything, 0.2%. If you look at inflation-adjusted growth, we actually saw a decline. But if you adjust it for sampling, discontinuity in sampling, what you actually see is that wage growth rose 1.9%. That's the most it has risen since the 1990s. That should give the Bank of Japan a lot of confidence going into the spring wage negotiations in March. So I do think that the Bank of Japan will kind of wait for those negotiations to come through before they do anything, which means that they may not act in January, which also means that the yen will do well going into the second quarter, because if the Bank of Japan exits negative rates, as they've been preparing the ground for some time now, I think that the yen will do well from the second quarter onwards.
Okay, and certainly a lot of international eyes on that Japanese market, from the yen to stocks, as we see a more than 3-decade high on the Nikkei, certainly up another 2% in today's trade. Ven, thank you very much. Thanks to Ven Ram from our Markets Live team. Remember, you can get up-to-date analysis and insight from Ven, from Mark Hudmore, from Annie van der Veld, all of the Market Live contributors that we talked to on this programme. You'll find them all on the Markets Today blog. So go to MLIV Go on the Bloomberg terminal for that. And if you want the Markets Today blog, you can go to that on the Bloomberg UK website, or TLIV Go is the function to use on the Bloomberg terminal. Stocks in limbo this morning, waiting for US CPI tomorrow. The pulse is up next. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We're like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Bitcoin steadies after a fake post saying the SEC had approved ETFs of the digital asset, while an actual decision is expected later today. Houthi rebels carry out one of their largest drone and missile attacks on commercial ships in the Red Sea, prompting action from U.S. and U.K. warships in the critical sea route. Plus, sales at the world's largest chip manufacturer, TSMC, fell 8% in December, but revenue for the quarter was actually a beat. Now, also coming up, exclusive interviews with the chief executives of one of India's biggest tech companies, Tech Mahindra, and of South Africa's most valuable listed company, Naspers. So all of that is coming up. We also have a great interview looking at the global risk report by the World Economic Forum. Now, let's also take a look at the European markets map. It's very clear when you look at the last 12 to 18 hours that we're seeing a bit of a risk-off mood in a lot of these markets. Japanese stocks, so for example, climbing to fresh highs. I think they're at 3 decades highs. Again, that really contrasts with muted trading across the rest of the equity world. As you can see, I think the CAC 40 is pretty much unchanged. The UK is a little bit in the red. Again, there's broader sentiment that seems very cautious ahead of that key U.S. inflation report, and that will probably change the dynamic or not in the markets. Now, to talk about these markets, to talk also about Bitcoin ETFs, we're joined by Justina Lee and our senior editor on crypto, Anna Herrera. So thank you both for joining us. First of all, Justina, just to get it out of the way, I mean, it's all about inflation. Yeah. And it's still about inflation, and so the markets are a little bit in a wait-and-see situation for the moment, I guess.
Right, exactly. I mean, we've kind of seen this tussle between bond market kind of traders, which seem a lot more hopeful about how many rate cuts we're going to get this year. And at the same time, we've had kind of Fed officials pushing back against that narrative, saying that, you know, they kind of see policy as appropriately restrictive for now. And I think the inflation data this week is going to be really important in seeing kind of like, you know, whether we're still kind of on track for cooling inflation and whether it might even like undershoot expectations, because that would point to like the lagging effects from monetary tightening coming through.
But Justina, overall, and I know you've been on TV kind of trying to explain what we saw at the end of last year, which was a real dichotomy between what we're seeing in the real economy in terms of data and what the market we're pricing in. Are you expecting it to kind of track a little bit more this year?
Yeah, I think that really is a great question. I mean, what the stock market is telling us is sort of different from the bond market, is in that it's really sort of basking in the glow of this kind of like Goldilocks scenario. And I think what the stock market really needs is kind of like, is more closer to the Fed scenario, which is that inflation coming down enough, but economic growth not slowing so much that we're going to get, like, I don't know, 1 percentage point of rate cuts or something.
And today the focus is firmly on these Bitcoin ETFs, and I haven't really seen anything like it. So yesterday, we were kind of expecting news from the SEC this week to see whether there's approval for an ETF on Bitcoin. Yesterday there was a tweet, but it was actually a false tweet. So someone managed to hack into the SEC X account and saying it was approved when it wasn't.
Yes, which is, even for crypto standards, quite insane. And it turns out X is saying that the SEC didn't have two-factor authentication, which is a pretty standard way to protect your accounts. And obviously the irony wasn't lost on crypto folks who have been, under pressure from regulators and criticized for not having strong cybersecurity controls, and now, they get this hack on the other side. So it was quite interesting, but it did show what the reaction might be if an SEC gets approved, and we saw Bitcoin fall quite quickly and other crypto assets. So maybe it is priced in. I mean, it's quite interesting that you're still able to manipulate, not manipulate, but because we don't know if that's what happened, but you're able to move prices with tweets and just hack into the SEC's account.
Yeah, it's funny. So that's what I thought. I was like, wow, it's still very relevant, actually, because Bitcoin did move quite a lot. Were we expecting it to go down? So again, I mean, this was a hack, so we don't know if it's approved, but would it have been surprising that Bitcoin fell on the back of the approval of ETFs?
I think so. People are more expecting it to shoot up. We had a similar incident where people thought that they had been approved and the price shot up. But it has been going up and down a lot since the start of the year, so maybe it is priced in. We'll see now what the reaction will be, because obviously now it's happened already, so people know what it's very messed up, I guess.
It is very messed up. What happens to actually these kind of Bitcoin or just in this world as an asset class in 2024? I think 2023 destroyed a lot of credibility for it. Is this the year where they build it back up?
Yeah, it's kind of interesting because currently, we're all expecting the SEC to, approve some of the ETFs based on the court decision earlier. So that would mean suddenly there is a way easier kind of way to just invest in Bitcoin, and you don't have to worry about, FTX or Binance. But in a way, it's kind of ironic, right? Because crypto was always about inventing a new way of doing things. But if everyone's just going to plow their money into the Bitcoin ETF, then that's kind of a different narrative there.
But Anna, if they approve it, I mean, it's a big deal because are they basically saying that they now think that Bitcoin is less likely to be used for deviating funds and for money laundering?
So I think a lot of the concerns they had originally was that the price, you couldn't really rely on the price, and it was a little bit manipulated. So I guess it means that those concerns have been sort of laid to rest a bit. And so it does show that the asset has matured enough that people are willing to, or regulators are willing to let mass investors get into crypto. But obviously it won't completely be deviated from the crypto infrastructure, because you still need to buy underlying Bitcoin and store them with someone, and that custodian for now is Coinbase. So, it is still tied to crypto, really. It's not completely detached.
But would the SEC do due diligence, for example, on money laundering? No, it's not really what they do if they approve the ETF.
No, I think it's a bit separate. That would be another issue.
Justina, do we know if a lot of, again, it changes the positioning of big asset managers? We heard from Larry Fink of BlackRock on Bitcoin ETF, but if it does get approved, and I don't know what's the likelihood of it getting approved? Are we like 80% there?
I don't know. Everybody, it depends every day. I think that there was one of the issuers yesterday who said we're pretty sure we'll get approved, which also led to people quite, reacting. Yeah.
But does it mean so that more asset managers, big asset managers, will take positions or on Bitcoin ETFs, or is it still quite small?
I mean, I think so, kind of in the sense that a lot of what's always stopped them is having to navigate the infrastructure of crypto. And suddenly there's a product out there that they're very familiar with. And so I think now they're going to see it as kind of, any other ETF. And so if they kind of want to take a position, they can easily take a position.
Of course, our obsession is still with the bond rally. How much time are you spending looking at what bonds are doing in this kind of environment?
Yeah, I mean, I think that's kind of definitely still a big one. I mean, are we really going to get that much rate cuts? And I think, it's interesting because right now with kind of real interest rate where it is, you could get some rate cuts without it becoming kind of full-on easing. But at this point, has the bond rally already priced in, many more rate cuts than the Fed is projecting itself? I think that's sort of the big question here.
Thank you so much, Justina and Anna, Justina Lee and Anna Herrera, of course, on all asset classes, but a lot of focus on this possible Bitcoin ETF approval. Now, let's also bring you an update on the big corporate story of the past few days. This, of course, Boeing, and the chief executive, Dave Calhoun, says the plane maker must own up to its mistake after a dramatic mid-air fuselage blowout forced the grounding of some of its planes. Now, Calhoun had called an all-hands meeting with employees to reinforce safety as Boeing's top priority.
We're going to approach this, number one, acknowledging our mistake. We are going to approach it with 100% and complete transparency every step of the way. We're going to work with the NTSB, who is investigating the accident itself to find out what the root cause is. I have a long experience with this group. They're as good as it gets.
Now, coming up, can India's tech sector continue to outperform? We'll be joined by the chief executive of Tech Mahindra. That's coming up shortly, and this is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're
in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Next week, Bloomberg is live at the World Economic Forum annual meeting in Davos, Switzerland. As markets anticipate a dovish pivot by central banks, policymakers grapple with two wars on the global stage, and AI continues to dominate the tech headlines. Trust Bloomberg for the fastest coverage and exclusive analysis from the world's top leaders and experts. Coverage begins next week, only on Bloomberg Television and Radio.
Welcome back. Now, Indian tech stocks enjoyed a rally at the end of last year, with the Nifty IT index up some 12% since the end of October, outperforming the Nifty 50. Analysts have, though, sounded a note of caution ahead of earnings due out this week and next. Well, with me now is Mohit Joshi. He's managing director and chief executive of one of India's biggest tech firms, Tech Mahindra. Thank you, sir, for joining us. I know we always have an interview to look after Davos or before Davos, and this year it's going to be a pretty big one with a lot of focus, actually, on AI, on tech. We'll understand how chief executives are spending. Are you optimistic about the next 12 months?
Yes. So, Francine, look, I think, again, it's great to be back over here and to speak to you just in advance of Davos again. Clearly, the past 12 months have seen a lot of volatility and turmoil. But long run, I think we are very optimistic, right? The way in which technology is transforming the world, the promise of AI and what it can do to multiple industries, the coming together of the digital and the physical worlds. There's just so much happening that it's hard not to be optimistic about the long-term prospects for our industry and for enterprises in general.
So what does it mean on how it changes your company, how AI changes your company? Does it change the way people are spending, what products you're offering?
Sure.
And actually, how do you defend from fakes?
Sure. So I think, look, what AI really does is that it is transforming entire industries, right? So the first thing that we're doing is that we're looking at all of the offerings that we have. Let's say that we have an offering in, for our telecom clients around how we make their networks more autonomous and more effective. We are now able to use AI to really reduce the power consumption of the networks, to make the networks more self-healing, for instance. So it is, how do we infuse AI into each and every single service line that we have, and how do we use it to transform entire industries? From our own perspective, obviously, it has meant a huge amount of training, right? So, over 30,000 people, for instance, trained in pair programming. It has meant looking at our own processes and seeing how we can use AI to make these a lot more efficient. Yeah. It is a lot of things, right? Yeah. So what we're trying to do is to get away from point solutions, because there are clearly ways in which AI will transform the contact center. What we're trying to do with our customers is to have a view on how AI will transform entire industries.
Yeah, but can you give us a glimpse of how you think they'll transform? Because again, it's so large that it probably changes everything we'll do in the future. Yeah. But will it come quicker than we think, or will it be slower? And can you give me a concrete example?
Sure. So I'll give you a couple of very interesting examples, right? So for one, we're working with an auction house. And if you know auction house and art dealers, for instance, there are often a lot of damaged artwork or damaged paintings. Now, how do you envisage or imagine what the artwork will look like when it's restored? And I thought this was just a phenomenal use case of AI being able to fill in the gaps in the artwork, of imagining what a restored artwork would look like. There's another very interesting example that we did with a very large furniture retailer. And in the sort of the aftermath of the Barbie movie, they wanted to take their entire catalog and turn it pink. Now, if you can imagine, taking a catalog and turning it pink would have meant sort of designers working over weeks and weeks, right? Now, in this case, we were able to use Gen AI and be able to transform their entire catalog into pink almost overnight, right? So I think these are just two sort of interesting examples of the use of AI. But if I look at it more systematically, if I look at the telecom business, for instance, which is a very significant portion of our, of our business, whether it is from a contact center perspective, or from a network perspective, or from a product management perspective, what can AI do for the various parts of the business? And so, therefore, what is the level of, of automation, productivity, improved customer service that you can drive? We're coming up with a very comprehensive point of view for each industry, for telecom, for manufacturing, for financial services, for healthcare. And again, you asked about the speed.
Yeah.
And my sense is, look, again, like every technology, right, it will be slow to take off, but ultimately prove to be a lot more transformational in the long run than we can imagine now.
Amongst your clients, who do you think will spend more in 2024 in terms of industry groups? I know some of the carriers are struggling. Yeah. Some of healthcare is doing quite well. Do you already have a good idea of who's in a better shape?
Well, it's hard to say just now. And again, we do have a very robust and global client base. On the whole, the American clients seem to have held on better than, than the rest of the world. We do see manufacturing as a sector that has continued to power through the slowdown. I do think that banking and financial services, which is a $1 billion plus industry for us, will come back, this year. So that's how we see the world. And again, for telecom players, right, I feel that the opportunity for them to reinvent themselves, to get more closer to the customer, to drive revenue growth is absolutely there. And I do see, again, sort of early seeds of optimism in that industry.
Yeah, but are there spending pressures? And again, what does it mean for the medium-term, I guess, outlook for revenue?
Yeah. So look, I mean, we're in a silent period just now. We announce our results later this month. But on the whole, I do feel that, given how the global economy is shaping up, the bottom didn't fall out of the economy last year. And we're hopeful that by the second half of the year, we should see an uptick in spend. And that is what all the, all the analyst firms, are calling for as well. And anecdotally, in conversations with our clients, again, January is going to be very important, right? Because January is typically when the bottom falls out of the market, and if we can hold on to this optimism towards the end of the month, I feel we're set for a better year.
Do you think it's real optimism, or is it mainly because 2023 was a funny year?
Yeah.
I know this is not like CFA level 5, but we were expecting it to be a terrible year, and every 3 months it was, look, we're going to see a recession. We never saw it materialize. So again, how much of this optimism is compared to last year, and how much of it is actually seeing green shoots?
Yeah, but my own sense is that, look, the pessimistic position always sounds more intellectually robust and sound, right? And the optimistic position always sounds a little bit somebody trying to push an agenda or somebody trying to sell something. But I do feel that in the long run, enterprises need to spend on technology. Many of them have already lost the year by cutting back discretionary spending fairly significantly. I do feel that if the economies grow even at the lower end of what has been forecast, we should see a better year than 2023.
I know a lot of the risks out there, again, are misinformation, fake news, things like that. Is there anything that you're focused on as we're also in an election cycle, frankly, across the world for this year?
Yeah. So look, I think we're always very mindful of the fact that we have 150,000 employees across the world. We do business in over 50 countries. I think the best sort of inoculation for a company from a cybersecurity perspective, apart from obviously technology, is the culture, right? We want to make sure that our people understand the risks that are there and that they are very mindful and thoughtful in how we build technology for our clients and make sure that we keep them secure at all times.
What are you most looking forward to at the World Economic Forum? It's amazing. I know, a lot of times people say, look, it's just for the elites, it never gets done, but it's amazing how many people are going. And the fact that at least it's a good forum for people to get together and maybe do business.
Yeah. So look, I think, we were just talking before this. This is going to be my 10th time at the World Economic Forum. And for me, it's always incredible what a great turnout there is. But more importantly, the fact that people are open, right? And sometimes you catch early trends in Davos. So for instance, people in Davos have been talking about AI for the past 4 or 5 years. Well before it became mainstream. So I'm actually very keen to know, will a lot of the discussion be around, for instance, bioengineering, or will it be around, space technology? So you always catch some of the early trends in Davos. And again, looking forward to meeting with clients, meeting with old friends, and coming back with a new set of ideas to take forward into 2024.
Well, Josh, thank you so much for joining us. That was the Chief Executive at Tech Mahindra. We'll have plenty more on Bloomberg. This is The Pulse.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences but without losing the efficacy.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Now, U.S. Secretary of State Antony Blinken is meeting the Palestinian President Mahmoud Abbas in Ramallah today. Yesterday, Blinken said Israel must stop undercutting Palestinian governments and rein in settler violence. Now, it's some of his most direct criticism of the Prime Minister Benjamin Netanyahu's government since the start of the war with Hamas. Israel has largely ignored growing calls to scale back the intensity of its campaign in Gaza and is pushing ahead with its plan to target Hamas leaders. Meanwhile, the UK Foreign Secretary David Cameron says he's worried that Israel may have broken international law in Gaza, while Hamas-run health ministry officials in the Palestinian territory say over 23,000 people have been killed since October 7th. Cameron said he regularly consults government lawyers over incidents in the war, but refused to say whether Israel has acted illegally.
Am I worried that Israel has taken action that might be in breach of international law because this particular premises has been bombed or whatever? Yes, of course I'm worried about that, and that's why I consult the Foreign Office lawyers when giving this advice on arms exports. So that's why I don't go. So if you put it that way, I'm happy to say, yes, of course, every day I look at what's happened and ask questions about, is this in line with international humanitarian law? Could the Israelis have done better to avoid civilian casualties? Of course I do that.
And Houthi rebels have carried out one of their largest missile and drone attacks to date on commercial shipping lanes in the Red Sea. The move has prompted a response from U.S. and UK warships patrolling the region critical to global trade. Now, they shot down 18 drones, 2 anti-ship cruise missiles, and an anti-ship ballistic missile. And the World Economic Forum releases its global risk report in just a few minutes, and we'll hear from Sadia Zahidi, the WEF managing director. That conversation is up shortly, and this is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping. Look, people have conviction, or they invest for the. If they invest for the right reasons, just keep at it.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Or other authorities.
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Bitcoin steadies after a fake post saying the SEC had approved ETS of the digital asset. Now an actual decision is expected later today. Houthi rebels carry out one of their largest drone and missile attacks on commercial ships in the Red Sea, prompting action from U.S. and U.K. warships in the critical sea route. Plus, sales at the world's largest chip manufacturer, TSMC, fell 8% in December, but revenue for the quarter was actually better than expected. Now, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London. A new report from the World Economic Forum has given a gloomy outlook on the risks facing the world in the coming years. The release of the Global Risk Report comes before leaders from government and business gather in Davos next week. Now, I spoke to Sadia Sahidi, the WEF's managing director, about the findings.
In the 2-year time frame, mis and disinformation, #1 risk. So we put together the views of 1,500 experts, and that's what they're most worried about. Very closely followed by extreme weather, societal polarization, inflation. These are some of the topics that are top of mind. But 10 years out, 4 top risks all about the environment, including for the first time crossing tipping points for the Earth's systems. That's something that is top of mind, and I think the predictions that that could happen in 10 years and how severe that could be deeply concerning.
Disinformation, fake news is extremely worrying in an election year. We have a large percentage of world GDP actually going to the polls this year. How worried are you about the U.S. election?
I mean, depending on how you count it, major economies with large populations, India, the US, are going into these elections. And what we found is that at each country level, in addition to the global risk around mis and disinformation, it's usually ranked very high among the top 5 risks around the world, as is concerns about an economic downturn. So what we're thinking is when these two things come together, the economic hardship being faced by many people and the rise of synthetic content, combined with going into an election year where people get to make decisions about who's going to be leading them, that together can be a very potent mix. And in particular, if some of those views start spilling over into very different perceptions of reality when it comes to health, when it comes to what people are thinking about education, what people think about specific people, who then becomes the owner of the truth.
Yeah, and again, do you have a breakdown of actually this misinformation? Is it state actors? I know Russia has been involved in the past in U.S. elections.
So we're seeing a concern that this could become much more pervasive. To some extent, it's almost easier to track some of that state-sponsored disinformation and misinformation, but now at some point that starts spilling over and it becomes very difficult to track, especially without tracking systems, watermarking systems, and especially without the public being well educated about the risks of synthetic content, and especially when that is fake news.
Does that have a clear impact on the economy, as I guess chief executives don't want to spend because they don't know what pans out in the next 12 months?
So there's a lot of economic uncertainty. We're seeing a risk of the lack of economic opportunity. We're seeing inflation in the top 10. We're seeing a lot of concerns around what exactly happens. And that's because of two different situations. One is, of course, there's continues to be uncertainty as to what the policy outlook will be. Yes, we are starting to tend towards a softer landing, but at the same time, I think there are new pressures coming in, supply side pressures that are coming in. There's geopolitical risks out there, and that may change what happens over the course of the coming year. And then there's a longer term economic risk, and that has a lot more to do with the divergence between developed and developing economies, and that also has a lot to do with the divergence between high-income people and low-income people across all countries. And that divergence, combined with the existing social polarization together, can then create additional economic uncertainty.
This is a very gloomy outlook for 2024. Is it even more gloomy than what we had last year, where we thought that higher interest rates could actually crush economies and companies?
Last year, we had two sets of extremes. So we had people that were in a very negative camp, in a very positive camp, but over time, those two extremes were converging, and their outlook for the 10 years was much more positive. This year, it's deeply concerning. We have about 60% of people that already believe that we're on the precipice of some form of catastrophic risk, and that is going to increase even more in the 10-year time frame. Sorry, from 30% to 60% when it comes to catastrophic risk over the next 10 years. So that means that the outlook has shifted deeply towards a darker side over the next 10 years.
I know a lot of people that read this report and saying it means I need to take more action. Is there a real danger that because there's a difference between the shorter term risk, which is misinformation, the longer term risk, climate change, and the shifting of the world, that they don't take the longer term actions? I'm talking about chief executives and world leaders.
Absolutely. So this is one of the greatest concerns coming out. What is the space for action? Because we're looking at currently a very complex picture, a lot of here and now crises. We're looking at some of those crises becoming deeper over the next 2 years. And then 10 years out, we've got a completely different set of crises. So for example, something like the adverse impact of artificial intelligence, a very low risk at the present time. In the 2-year time frame, it's down the 26th spot. It jumps up into the top 10 over the course of the 10 years. Are we prepared enough about things like climate, about the adverse impact of new technologies over the 10-year time frame? Are we taking those actions now? And I think that's something that the responders are very concerned about.
And Sadia, how much is it also fear of the unknown? So you don't know the outcome of elections, you don't know exactly how much misinformation there is out there, and you certainly don't know what AI ends up being.
Some of this is about that lack of certainty around what's coming up, but I think it's also about that overall structural shift that's taking place. So we know that Earth systems are changing because of climate change. We know that geopolitical structures are changing. We know that the underlying forces of the economy are starting to change, and societies are starting to become more fragmented. And at the same time, we know that technology is moving forward at a pace that is completely unprecedented. And this year, that's the background we used, that everybody is now aware of some of these structural shifts that are taking place. And in the midst of that, to have additional shocks and to have decision-making structures which are maybe not quite ready to handle this level of change, that together is what's creating this outlook.
That was Sadia Zahidi, Managing Director at the World Economic Forum, speaking to us a short time ago about the latest global risks report. Now, coming up, we'll be hearing from the Chief Executive of Naspers, Africa's most valuable company. That's next, and this is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
Welcome back. So the sell-off in Chinese tech stocks continues with Tencent closing down nearly 2% today. It's the fifth consecutive day of losses and Tencent's longest losing streak since September. Now, the move will be a concern at Naspers, Africa's most valuable listed company, which has been selling off its stake, but it still owns more than a quarter of Tencent. Well, Bloomberg's Jennifer Zapazaja is in Joburg with an exclusive interview for us. Hi, Jen.
Yeah, hi, Fran. Good morning to you. I'm very pleased to have Phuthi Mahanyele-Debengwa, the Naspers SA CEO, joining us here in studio. Phuthi, thanks so much for being here. So Fran was just talking for a few minutes about Tencent down slightly. I know Tencent is slightly different than what it is that you manage, but when we talk about the investors here in South Africa and the Johannesburg Stock Exchange, is there a concern right now about where tech is heading?
So thank you very much, Jen. It's great to be here. I think when you look at the tech industry and you see the difficulties that we have been through in the last few years, you see just the opportunities that we see. Certainly when we look at our businesses in Naspers and Prosus, we're very much looking forward to seeing the growth that we're seeing within our businesses. I won't speak to results since those will be coming out soon, but it really is a very positive trajectory that we're on. And I think certainly generally throughout the tech industry, we'll be seeing more of a positive trajectory. And that's notwithstanding the difficulties that we, as have seen on behalf of our consumers in terms of the economic environment that consumers have been operating in, and also the regulatory environment, the impact that has had also on the industry. And so there's been a number of issues impacting on the industry, as has many other industries being impacted. But notwithstanding that, we remain very positive.
Does that, I know you were recently in India because you and your team have a lot of investments there. Does that potentially then impact you replicating any sort of success here in South Africa because of all the headwinds and the challenges? I mean, how are you looking at it?
Not necessarily. So we're a business that invests in entrepreneurs in those particular environments. And so from that perspective, it's about backing those entrepreneurs. And so we are impacted to a certain extent by some of the global headwinds. However, it's largely about driving and focusing on the work of those particular entrepreneurs. And so when I look at the businesses that we have here in South Africa, I'm very, very confident about the businesses that we have here, looking at the Take-A-Lot Group, looking at many of our classifieds businesses that are based here in South Africa, even our media business. And so it really is good just to see that we're focused on a very positive trajectory where we are really focused on ensuring that we have profitable businesses for our investors. And so, yeah.
Are they profitable here in South Africa right now?
we are working towards ensuring that all our businesses become profitable.
And
we're on that trajectory.
And you mentioned Take-A-Lot, so I want to go there because for people who don't know, Take-A-Lot is the biggest e-commerce platform here in South Africa.
Correct.
And there's a lot of talk about Amazon, right? Amazon is finally imminently going to be entering into the South African space. How do you retain that market share with Take-A-Lot, considering the behemoth that Amazon is coming into this market?
Yeah. So I think it's good for South Africa that an Amazon is attracted to coming into the market. We, as a business, have seen that Amazon has been successful in some markets, but has not been successful in all markets. And so, as Take-A-Lot, the Take-A-Lot group, I think we're very well positioned. We know our market very, very well. We have been in this market. Take-A-Lot has been in the environment for 12 years now. And so, they're very well entrenched. Looking at the different categories of Take-A-Lot, whether it's Takealot.com or Mr. D or Superbalist, our fashion business, we have businesses that are well entrenched in the market. And so we feel confident about the business continuing to scale and being a profitable business, notwithstanding the entrance of Amazon.
Does it present, though, the fiercest competition that you've maybe seen yet in this market?
It does, yes.
And so that doesn't concern you at all?
It does concern us, and that is why we are ensuring that our business is well equipped. We are investing more into our business. We are ensuring that we're well positioned to be able to deal with having our environment, having a big player like an Amazon.
What does well positioned look like? Can you just dig into that a little bit more?
So we're investing a lot more into our businesses. So as an example, if I look at our DCs, our distribution centers, we're ensuring that we have access to all the distribution centers that we require. We are ensuring that we've looked through the entire route to market and ensuring that we are well positioned towards being able to deal with whatever could be coming from Amazon.
Well, and there's a lot of, when we just think about, you were alluding to the uncertainty. A lot of people talk about 2024 being an uncertain year because of a number of things that are happening. How do you navigate that? I mean, how do you set up for that, given there's also an election happening here in South Africa? I mean, how is the business positioning itself here?
Well, the reality is that things are never really just certain. Things are constantly changing. And in our environment, we find that there's constant changes, whether it be the war in Ukraine and the impact on that with respect to the commodities that we have to import into South Africa. So there's constant challenges that we face. This is another significant challenge, but we've been preparing for a number of years.
This by what? When you say this?
I'm talking about the entrance of an Amazon into the market. Yeah, yes. We have been preparing for a number of years.
What do you see as the next challenge then on the horizon for 2024?
I think the next challenge on the horizon for us is to ensure that our business is well positioned in terms of ensuring that we have the best routes, we are well priced, we have good people and all of that. And this is something that we have been investing in now for a number of years. And I think we're well prepared.
Are you considering adjusting pricing then, considering the other entrants that are in, to stay competitively the competitive advantage?
We are constantly looking at pricing to the advantage of our consumers. And so that is something that we have continuously been doing in any case.
And I just want to finish on the fact that, we started off with Tencent. There's Naspers, there's Process. I think anybody who knows these companies knows about the complex cross-holding structure. Have some of the unwinding that we've been seeing over the past few months, have they sort of helped with the discounts throughout the company? I mean, is there more to come? Do you think that, your interim CEO, Irvin Tu, is looking into more?
Well, actually, Irvin Tu was very much a part of the team that was looking at the cross-holding and working at ensuring that we have that, the removal of the cross-holding taking place. And so that is something that has been key for us. We have seen, the appreciation of our share price of Process and Naspers as a result of the removal of the cross-holding. But, we operate in a volatile environment. So it could be another impact in another geography. And so our share price is a difficult measure for us to use as an indication of our success. But what I'm happy about is the fact that the underlying business, and in terms of the undertakings that we've made to investors, that our e-commerce portfolio would be profitable, we are very much on track towards achieving that. And so, that is something that, is important for us, and which we have full control over.
So then do you think when people are taking a look at the share price and the ups and the downs, we saw Naspers in process over the past few days sort of dip a little bit, you're saying they shouldn't necessarily look too much into that and look at other indications?
Absolutely. I'm saying that over the long term, we've been listed on the Johannesburg Stock Exchange for many, many decades now.
And one of the biggest weighted companies.
Absolutely, we are. Prosus is the second largest listed company on the Johannesburg Stock Exchange. And so, we're very much aware of the impacts of the market. And the reality is that there's a number of external issues that will impact on the share price because of the fact that we are in 100 geographies across the world. But the reality is that, what we are focused on is ensuring that we have a profitable business. That is what we have undertaken to our investors, and that is what we are focused on, and we're delivering on that. And so, we remain very positive towards, having a business that our investors continue to be very happy about.
Potentially expansion in 2024? Or?
There's always opportunities for expansion. I mean, our ventures team is continuously looking for opportunities. And so there's a number of opportunities that we continue to look at.
Even on the African continent?
Even on the African continent, we look at different opportunities, yeah.
All right, we have to leave it there. Thank you, Phuthi, for being with us. That is Phuthi Mahanyele-Dibengwa, the Naspers South Africa CEO, joining me here in studio. Fran?
What a great interview. Thank you so much. Jennifer Zabazaja there speaking to the Naspers, as she was saying, South Africa executive. Now, the world's largest contract chip maker, TSMC, says sales fell over 8% in December. Overall, fourth quarter revenue beat estimates, with demand for AI processors offsetting sluggish smartphone and laptop chip sales. Now to France, which has its youngest ever and first openly gay prime minister. 34-year-old Gabriel Attal rose to prominence as government spokesperson and then education minister. Now, his predecessor, Elisabeth Borne, resigned on Monday following political turmoil over immigration law. Now, Macron will work with Attal to name a new government in the coming days. We'll have plenty more, of course, on all of this and more world news coming up shortly. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No, this is the nature of capitalism. Get over it.
What does it take to be a great surgeon? This may sound trite. Perseverance, resilience, in practical terms, being able to take a blow and not having it become a permanent deformity, and grit.
Polish police have arrested former Interior Minister Mariusz Kamiński and his deputy, who were holed up at the presidential palace in contravention of a court order to send the men to prison for abuse of power. Now let's go straight to Bloomberg's Warsaw Bureau Chief Piotr Skolimowski for more. Piotr, this is a pretty incredible story. Can you just give us a little bit more detail of what exactly happened?
Yes, it is quite bizarre, to be honest. What exactly happened is yesterday. We've seen for a couple of days, the situation was that these two former officials, or the officials of the former ruling party, were actually were convicted by the court in Warsaw for the abuse of power over a situation or a sting operation that actually happened way back in late 2000. And what happened is that even though the court order was issued and was issued to arrest them, they were still at large, and police actually showed up at their homes yesterday to take them to prison. In the meantime, what happened was that these two gentlemen were already at the presidential palace taking a photo with the president, and later were told by the president they can stay at the palace. And when the president wasn't there, he was meeting with officials outside the palace. The police moved in and actually arrested them. So what's going on is obviously it's quite bizarre, but what it tells us, or the story actually illustrates, that this is a situation where we have a new government that just is in power for less than a month right now, the government of former European Council President Donald Tusk. And this government was elected on this ticket of reversing judicial changes of the former nationalist administration, and they want to make peace with the EU and unblock EU funds. In the meantime, the former ruling party and the president, who is an ally of the former ruling party, is pushing back, and we are seeing an escalation. And this is one of the key or clear demonstrations of that escalation. Although we've already seen earlier that the government also moved in to put state broadcaster into liquidation because the state broadcaster was accused of being a mouthpiece of the former ruling party. So it's a very confusing situation at this point, and we're now waiting for the president to weigh in. He's going to talk in about half an hour and give his take on the situation.
Piotr, thank you so much. I know we'll keep on, of course, going back to you for updates throughout the day, and you can also follow everything that Piotr and his team write on the Bloomberg terminal. Our Warsaw Bureau Chief there, Piotr Skolimowski. Now, let's also have a look at Bitcoin. Yesterday was another incredible story with the SEC saying that their account was hacked. At the time, the fake account, or the fake tweet, said that actually they had approved this Bitcoin ETF. We do expect a real decision later today, possibly tomorrow. But yesterday certainly sent shockwaves across the world. You can see Bitcoin for the moment, 45,665. Up next, Bloomberg Brief, Danny Berger in London, Manus Craney in New York, and this is Bloomberg.
part of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we can deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly, we want to be there for her, but it's painful for us to see the toll dementia has taken on her. So this is rightfully, you know, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California, San Francisco, has been actually one of the key folks, you know, who has been leading some of that research on the impact of lifestyle and dementia. And, you know, this is a promising area.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
A very good morning from our world headquarters in New York. I'm Manus Granny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bitcoin swings after the SEC's X account is hacked to wrongly report the approval of the crypto ETFs. An actual decision that's expected later today. Boeing CEO fights back the tears and admits the plane maker must acknowledge its shortcomings as it grapples with the Alaska Airlines incident. And Houthi rebels carry out one of their largest missile and drone attacks on commercial ships in the Red Sea, prompting action from the US and UK warships. So what have we got for you? I told you yesterday the trade was sell gestalt, buy Japan. Well, it's the stocks that you want to buy. You're looking at the TOPIX surpassing its peak from 1990. This is a 34-year high in Japanese stocks. The Bank of Japan may well remain on hold for longer than you all think. Wages are obliterated. Real wages sink by 3%. That takes the pressure off the Bank of Japan. By the way, foreigners have been the biggest buyers of futures in 6 weeks in these markets. To the rest of the equity markets, be careful what you do. That is the view from Aberdeen Standard. Be careful. Don't throw the baby out with the bathwater, to paraphrase from my conversation with Luke Hickmore yesterday. And Richard Bernstein also say to us, now is not the time to be a hero, to take massive risk. You see a small reprieve in these equity markets this morning. You've got a downgrade from Calvasina over at RBC saying technology valuations, they are lofty, and the flows have turned negative. NASDAQ up 0.3%. UBS say there's going to be a moderate upside in global equity markets. Tactically, they listened to Danny Berger. I think Mark Hayfley and the entire CIO team tactically listened to Danny Berger. They said you want to have a tactical exposure to small caps. There you go, Danny. From your words to UBS's research. Good morning.
To be clear, I never recommended buying or selling anything. I am literally not allowed to do that. I'm a journalist. I just like checking small caps, okay? And I'm glad the rest of the world likes looking at it too. Man, this is what the world was transfixed on yesterday. You thought we'd get a Bitcoin spot ETF approval without some drama. Well, you thought wrong. Just want to show the chart. This was that false post on X, the SEC getting hacked, saying they'd approved a Bitcoin ETF. We spike up to 48,000. SEC says, sorry, that wasn't us. That was a hack. Now we've traded back down to the level of around 45,000. Let's flip it up at the moment. We're hanging around there. Bitcoin is higher by just a touch less than 1%, about half of 1%. We'll get that deadline end of day today, so the drama should hopefully maybe end in just a few hours' time. Meanwhile, Brent crude, that sinks this morning after a gain of more than 2% yesterday. That was off the back of increased Houthi attacks in the Red Sea. Standard Chartered says that the premium should be more like $10 priced into this market. Finally, Manus, we've been trapped in this range, around 4% for Treasury markets this week. But will it end? It's going to be a big rest of the week. We have bond auctions today, 10 today, 30 tomorrow. Then we also have CPI tomorrow, and then Friday kicks off the earnings season. And here is where I want to end, Manus, because the amount of sourness that analysts have started to feel about this American earnings season is stark. Back in September, analysts expected that earnings growth would be some 7.6%. Look at this drop, Manus. At the moment, they are expecting a 1.2% earnings growth. That is a low bar, and maybe one that a lot of companies can jump.
Yeah, well, I mean, let's see what the banks actually deliver on Friday. I'm just looking at the revenue. We've got a beautiful curtain raiser on the banks. Guess what? JP Morgan, their revenue growth year on year is expected to jump by 13.2%. If it doesn't have JD in it, it doesn't go anywhere. But if we've seen a lot of analyst notes come out over Citigroup in the past 24 hours, we'll talk about those a little bit later on. But the growth from JP Morgan and Citigroup in terms of earnings, and Goldman Sachs, they're in the clutch of four. Citigroup, Goldman Sachs, all in the fours, and that just shows you the splendid isolation of JP Morgan with a revenue growth of 13.2%. So it could be that the financials do perform a little bit better than everybody had anticipated. Danny?
Yeah, and that would be good news because there have seemed to be more warnings on this overall stock market as of late, Manus.
Absolutely. That chorus, that clack, Shakespearean clack, if you want to call it that, or a growing chorus to be a little bit more traditional. They're warning that stocks are emerging on Wall Street on the back of a staggering year-end rally. JP Morgan's Madison Fuller acknowledging the concern, writing this. Some now worry that the best gains are in the rear-view mirror. Mixed economic data, questions over when and how many rate cuts might come, and the growing geopolitical angst have all played their part. I'm pleased to say Madison joins us now. So Madison, I'm devastated. The best part of our returns are behind us, but this goes to the view. We've seen this quite coalescing about de-risk, de-risk, de-risk. But is it time to de-risk or just hold your nerve and see what this earnings season delivers? Good morning.
Good morning. I think bottom line, we are constructive, certainly on the year ahead for multi-asset investors. I think that we're starting with a bit of New Year's jitters for the reasons that you highlighted. But I think when we look at the slate of opportunities in the year ahead, we are more optimistic than not. For one, when you tend to, historically speaking, invest around near all-time highs, that does tend to signal strong returns into the year ahead. Going back over the last 50 years, if you had invested at an all-time high, your 12-month forward return would actually be higher 70% of the time, with a median return of around 12.5%. If you didn't invest at an all-time high, that's around a 10.5% median return. So all that's to say, there's not a meaningful difference. And then I actually think that we are in a bit of a sweet spot when it comes to equity markets now, where you're looking at moderating inflation, that really the nascent stages of earnings growth. Yes, we've seen some downward revisions. That tends to happen in your typical year, but we are constructive into the year ahead. And then I think you also, when you factor in the Fed easing, we do think that is an optimistic backdrop to be an investor.
I take it you would disagree with what Lori Calvasina had to say in a note. Let me just quickly read it to you, Madison, but I can feel the disagreement coming. She's talking about valuations. She says that valuations are now clearly expensive for the median stock, a change from a few months ago when valuations for the median stock looked more reasonable on her model. Flows, she's talking about tech here, have also turned negative rather abruptly. So as a whole, she says that tech stock valuations, I should have been clear, this is all about tech, and that's why she's downgrading tech. So would you say to that, I don't care about tech valuations, I can still buy right now?
I think you certainly need to care. I mean, not all tech is created equal, but I think, to that point, on a broad perspective, we do need to keep that tech rally in context. The last couple of years before last year were very difficult for tech. We actually just regained the previous all-time highs, the NASDAQ and the Magnificent Seven, in November and December. So we're really, I think, looking at a more modest rally when you look at it from that perspective. But then I think the more interesting part is when you, I think, compare the quality of tech to the broader market. So you're looking now at free cash flow that exceeds the broader market. You're looking at high and stabilizing margins. And then I think when you actually adjust for the long-term earnings growth power, actually valuations for tech could even arguably look more reasonable versus the median stock.
Part of the argument, of course, with big tech is that they did part of their catharsis last year. They did their job cuts maybe a little bit ahead of everybody else. They've got stronger balance sheets and they're doing well in a higher rate environment. Where do you stand on the great breadth argument? We've had them piling up day after day after day. Go for breadth. There's 493 other stocks. How do you manifest going for breadth, if at all?
Sure. I think this is a good year for breadth. I think two things can be true. I think ultimately technology stocks, particularly the ones that are exhibiting high quality earnings growth, can continue to rally. But at the same time, in a soft landing scenario where you're entering in this sweet spot for equity markets broadly, I do anticipate seeing more of those cyclical sectors start to participate in that rally. And there is, I think, meaningful room for further upside there. I mean, when you look at small caps, when you look at mid caps, when you look at financials, yes, you've seen a rally over the course of the last 2 months or so, but certainly still lagging the broader market. So I think ultimately that leads us to a constructive stance for equity market investors.
I'd say it was really interesting. Manus and I spoke with Max Kettner of HSBC yesterday, who said a lot of what you're saying, that the fundamentals actually look very strong, growth is okay, equity earnings are going to be good. But the issue for him was that the bond market rally has just gone too far. And that's going to undo itself. Yields are going to push higher. And just because that strange relationship between yields and stocks will fall because of that. What do you make of that argument? Are you also worried about another higher in bond yields?
I wouldn't necessarily rule it out. I think we certainly could see some volatility within bond yields, especially as we go through these, catalysts of Fed meetings and inflation prints like we have later this week. But I do think while, we're anticipating slightly less rate cuts than the market is at this point, bond gains and stock returns tend to be quite constructive in soft landing scenarios. I don't anticipate that bond yields are going to fall dramatically from a longer dated perspective, given the decline that we already saw last year. But I think when you think about what that means, it means you still have a very strong carry opportunity within fixed income, even if you're not seeing huge capital appreciation potential.
And just on that, PIMCO were with me yesterday, and they were saying now is at this point we don't see duration extension as a compelling tactical trade. Many people talk to Danny and I, they say they want 5s, they want 7s, they want the belly of the curve. Where are you on duration? Do you want to be a hero?
Yes. So I think it's about what your goals ultimately are. I think tactically, our preference is for shorter durations. So think about that 2 to 3 year space where you're still looking at very elevated yields that stand to fall as the Federal Reserve starts cutting interest rates. But to the point, we were just discussing from a strategic positioning standpoint, we are still in a very new interest rate regime. Bond yields and from the longer end of the curve are still far higher than where they've been over the course of the last decade. So while you might be, I think, outside of that tactical opportunity from a strategic perspective, I think long-dated bonds really serve that portion of the portfolio to provide income. And by the way, if we are wrong and we do see a recession, you would see yields fall. And we do think that bonds can provide protection in that scenario.
There you go. Always have a plan B, Madison. Thank you very much for joining us. Appreciate your time this morning. That's JP Morgan's Madison Fowler. All right, Madison, let's get to some of the other top stories that are trending on the terminal this morning. Chipmaker TSMC says sales fell over 8% in December. However, for the fourth quarter, overall revenue beat estimates as demand from AI players helped offset smartphone sluggish sales and sluggish sales from laptop chips.
Qualcomm CEO says the company's push into the automotive chips is on track to beat sales projections. Speaking to Bloomberg at the CES Tech Show in Las Vegas, we also expressed optimism about the growing role of mobile AI.
I'm believing the next user experience is going to be based on Gen AI on the phones, and we're optimistic that we could start to see devices as early as this year with those capabilities. Okay.
Donald Trump's claim that he is immune from prosecution has been met with skepticism by a U.S. appeals court panel. At a packed hearing in Washington, judges peppered Trump's lawyers with questions, testing how far such a theory could go.
Doctors for the U.S. Defense Secretary Lloyd Austin say he was hospitalized for complications from prostate cancer surgery. The disease was first detected early in December. Surgery was scheduled later that month. The White House admits it wasn't aware of his condition until Tuesday. Coming up on the show, Houthi rebels launched one of the largest attacks in the Red Sea to date. We discuss the implications. Danny.
And later in the hour, a false approval for a spot Bitcoin ETF sends the cryptocurrency swinging, and the SEC becomes the topic of a major cybersecurity incident. More of that here on Bloomberg Brief.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Next week, Bloomberg is live at the World Economic Forum annual meeting in Davos, Switzerland. As markets anticipate a dovish pivot by central banks, policymakers grapple with two wars on the global stage, and AI continues to dominate the tech headlines. Trust Bloomberg for the fastest coverage and exclusive analysis from the world's top leaders and experts. Coverage begins next week, only on Bloomberg Television and Radio.
We've had 40 countries come together to make clear that what the Houthis are doing has to stop. And we have other countries that have made clear that if it continues, there have to be consequences. So our strong view, our strong preference is that the Houthis get the message that they're receiving from countries around the world that this needs to stop. And that's what we're focused on.
Secretary of State Antony Blinken there issue a warning on Monday while he visits the Middle East. Elsewhere, Houthi rebels have now launched one of their largest missile and drone attacks to date on commercial shipping lanes in the Red Sea. Joining us now is Bloomberg's Rosalind Matheson. Roz, I mean, again, it's a continuation, if anything, an amping up of what we've already seen in the Red Sea. How does and how has the White House reacted to it this time?
Well, it's interesting seeing the comments just now from Antony Blinken, who's still in the region, saying the Houthis need to get the message, and if not, there will be consequences. But it doesn't seem as though the Houthis are getting the message. We saw that barrage yesterday. It took about 5 warships from the US and the UK collectively to shoot them all down, a combination of drones and missiles. It was one of the largest firings so far since the war broke out between Israel and Hamas. So the Houthis are not de-escalating despite all these warnings. The US keeps saying, if you don't, there will be consequences. So the challenge for the US is at some point they're going to have to do something more. They keep saying it, and the Houthis aren't listening. And so what can they do beyond what they're doing at the moment, which is to shoot down these barrages as they're happening? Do they have to consider some kind of targeted strike against the Houthis in Yemen itself as a response?
But that's the very escalation, isn't it, that the Americans and the coalition don't want. I mean, 18 drones, 2 anti-ship cruise missiles. I mean, this was one of the largest, and this is going to put profound pressure on Operation Prosperity Guardian. But the consequence of that for markets, translating geopolitics into markets, 12% of global trade goes through that route, and you're now seeing it kick in on freight rates, aren't we? Really materially.
That's right. We are seeing protracted diversions that have been going on for weeks now, and quite costly diversions for these shipping companies. And obviously, as you say, quite a lot goes through that area, primarily in the energy space. And so we're seeing the shippers increasingly concerned about that, and no likelihood of it seemingly shifting anytime soon. And so as that goes on, the premium that you're going to see that comes into things like oil, but also gas, quite important in that region, will continue to see that. But we aren't seeing at the moment any tangible impact on supply, and that's why you're seeing a bit of a premium coming into the market, but we're not seeing a big one because right now supply is still going on.
Now, in Blinken's presser, he also talked kind of a different tone about Israel. He talked about urging Israel not to undercut the Palestinian governance. Are we seeing a shift in the U.S. attitude and at least all-out support for Israel?
Well, that all-out support is still there, very publicly so. You can see that in the comments from Blinken, but also the US President Joe Biden. But you are seeing those signs of fraying, those tensions publicly with those meetings yesterday, the signs of frustration with the US. And it seems like Israel is just saying, you know what, we've still got our goals, and we're going to do what we need regardless of what you're saying. And despite that pressure from the US, politically one of its biggest strategic allies on the planet, they're saying, hang on, no, we're still going to continue on our timeline. And so you can see that friction really picking up. The question is, what can the US do about it? The US does have leverage over Israel. Is it willing to truly use it, and in what way, despite the sort of persuasion that it's opting for at the moment? And again, that puts the US in a very difficult position.
Yeah, well, certainly David Cameron under a lot of pressure in front of the Parliamentary Committee yesterday as well in terms of his considerations. So the heat is mounting in terms of what the Western coalition are saying to Israel. Roz, thank you very much. Roz Matheson there with the very latest in the Red Sea. Another bond auction. Yesterday, Danny, 24 hours ago, we talked about the Brits. Today, it's the Spanish. They received 130 billion euros worth of bids for their 10-year government bonds. And that is way, way ahead of what anybody had expected. So this narrative is building. There's yields dropping, not precipitously, down by 4 basis points, but this narrative is building. The Brits were bid heavily yesterday, and the Spanish are bid out today.
And you have to remember, Manus, people think, even though the expectations have been pared back, we think that these banks, these central banks, are going to start cutting rates. So if there are bond auctions, you want to rush in, you want to lock in these higher yields while you still can. We have a 10-year auction today. We'll see if the same repeats.
Yep, there's $2 trillion worth of supply coming down the pike, and it was a monster day for Europe yesterday in terms of corporate issuance. We'll check out these bond markets as we go through. Treasuries trade at 398, sub 4%, right here on Bloomberg. Good morning.
on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bloomberg Brief. I'm Manus Cranny in New York, Danny Berger alongside me in London. I don't often get excited, really. I mean, we do a bit of American football and NBA, but I am excited about this because Disney are going to have a new Star Wars movie, The Mandalorian and Grogu. So this is exciting. This whole series, when I grew up, this was probably the most exciting movie that you could go to see. The Millennium Falcon, Darth Vader. You see, look, a light up.
Yeah, see, this is kind of when like our generational differences really show. Because I'm not saying anything. I'm kind of saying something, but I'm not super tied to this. I love Pedro Pascal, who's in The Mandalorian, so I'm into that. But this is the thing, Manus. This is the first time they're going to have a new movie since 2019. And there were some disappointing results from the Lucasfilm, so that seemed to be why they put it on hiatus. But people are obsessed with this show on Disney+. So why not give it a shot?
You are committing heresy. There's nothing disappointing about this series. Nothing at all. I mean, you go back, you just think of the original cast. You like Mark Hamill as Luke Skywalker, and Harrison Ford, and Carrie Fisher as Princess Leia. So I'm all in. I'm all sold on that. But of course, we've got another movie to talk about. Tom Cruise, he's defecting. What's he doing?
I know. He was with Paramount. That's where his Top Gun and Mission Impossible were. He's now signed a partnership with Warner Bros. To make a new film franchise. But, man, what in the world is left for this man to do? He's already done Top Gun and Mission Impossible. What is this one going to look like?
Well, apparently there's another Mission Impossible in the making. And I actually made one of these in Abu Dhabi when I was living there at the time.
Were you an extra in it?
No, I don't actually have a cameo in that movie, but I do know a CEO out there who helped facilitate, let's say, the making of the movie, and he got himself a walk-on. That's what you call power.
Yeah, that's not too bad. All I can say, if they make an action brief, Manus doesn't need a stunt double. He can do all the stunts himself.
I'm available. I look good in a suit.
Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Bitcoin swings after the SEC's X account is hacked to wrongly report approval for crypto ETFs. An actual decision is expected today. Boeing CEO fights back tears and admits the plane maker must acknowledge its shortcomings as it grapples with the Alaska Airlines incident. And Houthi rebels carry out one of their largest missile and drone attacks on commercial ships in the Red Sea, prompting action from U.S. and UK warships. Well, of course, there's drama around the Bitcoin ETF approval. Why wouldn't there be? Bitcoin spiked as much as 48,000 yesterday on a tweet from a hacked SEC account. They said they approved it. Turns out it wasn't actually the SEC doing that. So they backtrack or tell us that it was a hack. Bitcoin now trading around 45,000. So a big swing in those prices. Meanwhile, Brent crude was significantly higher today. We give a lot of that back, down by about 0.25%. Yesterday, it was the increase of attacks in the Red Sea by the Houthi rebels. But Standard Chartered says we're a long way away from pricing the risk premium, the war premium. That should be about $10 a barrel. Finally, U.S. 10-year yield. This is just below 4%. Manus, we have frustratingly been stuck in this range, but maybe CPI tomorrow wakes us all up from that and finally get some movement here.
Yeah, I mean, that CPI could quite literally fill or kill the hopes and dreams of the bullish side of the bond market in terms of retesting some of the higher levels, which we know a number of the houses want to see before they re-enter. Now, where were you 34 years ago? You don't need to answer that. I know where I was. I was trying to understand what EBITDA margins were. I was trying to understand what equities were. I was a young stockbroker, and this was the halcyon days of the Nikkei. We have closed at the highest level in 34 years. Why? Because you doubt the veracity of rate cuts coming from the United States and everywhere else, the scale and the pace. But in Japan, the currency remains weak. Wages are still under pressure. The Bank of Japan is probably going to be a reluctant raiser of rates and exiter of negative rates. So you've got a currency that drops. Foreigners are buying this market. Maybe Japan outshines some of the other markets this year. It was one of the big performing markets last year. Yields are sub 4%. What does that set us up for risk? Be careful what you throw out was the message from Aberdeen. Stocks are higher this morning, albeit by 3.5 points. But Aberdeen were with me. Luke Hickmore yesterday saying, be careful. The temptation is just to throw everything out because you're not getting what you want from the rates market right now. Be careful what you do. With technology, we have a call out there from RBC saying, downgrading US tech. Lofty valuations. The flows have turned negative. Do you believe that? Or do you believe that sub 4% and a trending lower in yield is going to support you there? And go for a bit of diversification. UBS say it very clearly. Modest upside for global equities, but a tactical exposure to the US small caps. Danny, there you go. 34 years ago. Stockbroker, hey? I was young.
Yeah, I'm not going to tell you where I was because the answer might be I didn't exist at that time. But on another note, to what you mentioned about RBC, this seems to be the argument that's developing over this equity market as we head into this first earnings season of this year, is that do you care about valuations? Lori Calvasina, she says she and the team care, hence why they've downgraded tech. They want to go towards those cheaper stocks, things like healthcare. So it's an idea of going into value stocks. But of course, we just spoke to Madison Fowler, who said, if you were not to buy at the highs, you'd miss out on some rallies. Actually, buying at the highs doesn't make that much of a difference.
Yep, I mean, it depends whether you're brave and you want to lump it all in or average it in, take incremental chunks. That, again, goes back to the conversations that I had yesterday. Let's carry forward because we've got a lot of volatility in the crypto markets. I mean, we've been waiting for months, Danny, speculation on a daily basis of the decision day for the SEC.
Bitcoin ETF, spot Bitcoin ETF.
It's really happening.
We're getting close.
It took 10 years to get here.
Expectation is almost at 90% that we are going to get an approval.
Can drive significant inflows.
Huge buying pressure.
What if this doesn't happen?
Approval is really bullish for the overall sentiment in the market.
Price catalyst to get Bitcoin over 100,000 by the end of the year.
If Bitcoin rallies, I'm willing to sit on the sidelines.
Some of these ETFs will trade at a premium.
The bigger question is, when does it go live?
It's interesting to see what's going to happen.
The crypto community will be happy just getting the Bitcoin win out the door for the ETF.
It's hysteria. Bitcoin prices are swinging around after the SEC's X account was hacked and falsely posted the long-awaited spot ETFs for the token had been approved. Can you imagine being in Gary Gensler's office on the back of this? Snotty bastard wasn't in the office, but I'm sure she was on the phone. I mean, this is monumental. I mean, we've been waiting every day for this approval, and then they get hacked.
It was a pretty incredible moment. And remember, they didn't even take the post down for almost 20 minutes when it initially went up.
On the ball.
Exactly, from the SEC Gov account on the X platform. You had Gary Gensler separately put out an X post saying that the account was compromised. So what now? Actually, not only did you see a significant move in the price of Bitcoin, we're also waiting on seeing how it impacts, if it impacts at all, the idea to approve a Bitcoin ETF by the end of business today. You also had, by the way, interestingly, a lot of pushback by Republican lawmakers, notably J.D. Vance and Tom Tillis of North Carolina and Ohio, respectively, or the other way around, rather. But the thing that they're frustrated about is that there really was a material change in the price of Bitcoin. Remember, we are having currently Bitcoin prices trade about 2,000 or so less than what we saw after the spike when the initial post went out. So a significant move in crypto markets and a lot of questions about how this happened in the first place.
Yeah, it's certainly awkward. Also awkward because, of course, the SEC cares and talks a lot about issues with companies being hacked. You kind of hinted at this, Shonali, but does it change anything for today? And I mean, in general, are we expecting an approval for a spot Bitcoin ETF to come through?
That has certainly been the wide expectation. But when you ask about where that expectation comes from, what you really look to is Bitcoin betting markets, the futures markets and spot markets that have rallied up till this point. You can also look at kind of the flurry of applications and revised applications that have come in through today. And really, these forums are in their final stage. There are a lot of people that believe that it's a done deal. But, you know, with the SEC, you don't really know. And you have to have that caution given how much Bitcoin prices have rallied.
Well, you got to hand, and we're going to talk about BlackRock in a moment, but Larry Fink has had a dancing conversion. There's no doubt about it. An index for money laundering, but when you think you're going to lose part of the pie, it's okay to say that it is a revolutionary moment for finance. That's what you call a magical transition. That's what you call, I believe in the power of crypto, because they just don't want to be left out. Now, listen, speaking about BlackRock, headline yesterday on the terminal, there are jobs to go. That's the real human side of this, but they are going on to say, look, this is a metamorphosis within asset management. So it's job cuts today, but it's growth tomorrow.
That is what they said. That is a memo to staff from Larry Fink and Rob Capito, the president of the firm. Listen, you have to think about BlackRock's trajectory over the last couple of years. Their assets hit more than $10 trillion in 2021. They have not recovered up to that point, though they have recovered significantly. Remember, this is a firm that's reporting just on Friday as well. They're expected to have risen in net assets by about $700 billion or so, but still below that peak that we saw in 2021. So what is BlackRock doing to transform? Yes, they said they would be getting rid of about 3% of their workforce. There is a human toll here, but they also really highlighted a couple parts of their business, that is the ETF business, particularly internationally, as well as their Aladdin business, their technology business that works with a lot of wealth managers and other financial firms and other types of firms around the world.
Well, Shonali, one firm that can certainly afford to not just keep their employees on, but probably hire new ones is Jane Street. I mean, the $70 billion trading haul. Put this in context. What type of year was it for Jane Street?
$7 billion, and remember, it's two things, Danny. On one hand, you had the first half of the year be a little weaker for a lot of people across Wall Street, but the $7 billion haul will show you that trading is really rebounding. They're expected to bring in $3 to $5 billion, $3 to $3.5 billion in the current quarter. To put that into perspective, that is pretty close to what Morgan Stanley is expected to bring in for the quarter. So we have these market makers, as liquidity has seeped out of the banking system. Jane Street, Citadel Securities have really shown up in a massive way. Citadel Securities bringing in more than $1 billion in revenue for 15 straight consecutive quarters. So the question is, how much share are these market makers taking from the big guys? And certainly these numbers are staggering. The question is, does volatility keep up to help the likes of Jane Street, Citadel Securities keep on bringing in these types of revenue hauls?
Yeah, some punchy numbers to make the banks weep just as they're getting ready to reveal their numbers. Shonali, thank you so much. That's Bloomberg's Shonali Bassick. And make sure you tune in for a special edition of ETF IQ with ARC CEO Cathie Wood and 21 Shares President Ophelia Snyder. Don't you worry, there'll be plenty of Bitcoin ETF conversation, 1 p.m. Eastern, 6 p.m. in London. Okay, Manus, let's talk about the latest with Boeing, because the inspections and groundings of Boeing 737 MAX 9s this week continues after last week's incident on Alaska Air. Boeing CEO David Calhoun fought back tears as he said the plane maker must own up to its shortcomings.
We're going to approach this, number one, acknowledging our mistake. We are going to approach it with 100% and complete transparency every step of the way. We're going to work with the NTSB, who is investigating the accident itself to find out what the root cause is. I have a long experience with this group. They're as good as it gets.
All right. We're joined now by Sid Phillips, our Deputy Global Aviation Editor. Sid, it is really remarkable to watch David Calhoun there. And I mean, it's very obvious, kind of teary eyes, very emotional. I mean, what kind of road does he face to help repair the damage, both literal and reputational?
So Boeing's had a very rocky road since those two fatal crashes in 2018 and 19. The MAX was grounded for a large part of almost 2 years. And so Boeing's had to rebuild that reputation. They've had serious quality issues along the way last year. And this is just one more issue that's sort of come up for the company. And it's really a question of how they get past this and sort of rebuild both customer trust as well as consumers and flyers trust. I think that's really the crucial part of how they fix this going forward.
This comes down to a confidence in the top. Just looking at Calhoun, he's been at the top in the job for 4 years. It's on his watch. You've got Michael O'Leary, you've got Tim Clark berating Boeing, having lagged and long issues. Can he survive this? Should the buck stop with the top?
I think it's still early days, and I think that's what shareholders and investors will be looking at in terms of how this sort of goes forward. At the same time, they still need to get the MAX 9 that's still grounded off the ground. Both Alaska Air and United Airlines have said that they still haven't received updated instructions from Boeing as to what checks they need to make in order to get the planes back into service. So I think it's still early days in terms of CEO, but in terms of actually getting the plane back in the air. I think that's something that airlines are closely looking at, especially as they need to look for capacity, and there is a surge in demand for travel, so it's all a big mess at the moment for them.
And of course, you know, the FAA has a role to play in this. They signed off planes, they gave certificates. You know, whilst we spend time talking about Calhoun and focusing on that, I think it's certainly worth making that point again, Sid, that the regulator, perhaps the regulator needs to have a look at itself a little bit more deeply. Sid, thank you for joining Danny and myself this morning. That is Sid Phillip on the very latest on the CEO town hall at Boeing. Coming up, financials are staying above the broader stock market amid the slower start to the year, Danny. We'll get a little bit more with Piper Sandler's Craig Johnson. Do you want to be long your financials? Good morning from London and New York.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
It's Bloomberg Brief. I'm Danny Berger in London. Manish Krani is in New York. Now, Citi is having a dizzying week. It got an upgrade from HSBC and then a downgrade from BMO. Now, I had a brief moment out of the spot of the least loved big bank on Wall Street, but because of that downgrade, sorry, Citi, it's back at the bottom of the list. Joining us now is Craig Johnson, Chief Market Technician at Piper Sandler. So, Craig, I mean, Citi virtually unloved at this point. What do the charts tell you? Is there any upside potential for this stock as we head into the earnings season?
Danny, thanks for having me on. The answer is absolutely yes, because if you look at the performance of Citigroup coming off of the October 25th lows of 2023, excuse me, it has been literally the best performing bank stock. If you look at JP Morgan, you look at Goldman, you look at Morgan Stanley, it has been the best. So some of the less quote unquote quality stocks have been some of the best performers off of the lows. So it looks like there still is more upside potential for Citigroup on the charts.
Well, certainly, one of the big cheerleaders there is this week in the sector, and you've got Mike Mayo. I love what he says, which is, he was wrong for the past couple of years in his view. No. The market is wrong. I'm not wrong. So there you go. A big one for him. Lovely article on him yesterday. Look, set the stage for us. Danny and I speak with a lot of macro CIOs who are coming in to sell their trade. Where do you stand? It's been a pretty tough start to the year. 9 weeks of gains have been interrupted or seriously interrupted, and I should review.
Yeah, so where we think this market is going to play out, it's been a great rally off of those October lows, but 2024 to us looks like we're entering an HLTR, or a high-level trading range, where this market is probably just going to end up consolidating. And as the market consolidates, the Mag 7 stocks are going to become the Lag 7 stocks, and we're going to see more mid and small cap stocks really start to pick up and perform. And that's exactly why you're seeing a lot of these financials starting to work. They are the biggest components inside of the Russell 2000 are going to be financials, healthcare, and also industrials. And these financial stocks typically do well from that last rate hike to the first cut, going back to 1989. Those statistics show that financials should work, and you are definitely seeing some of these lower quality or perceived lower quality banks picking up in performance. And that's exactly what's happened with Citigroup. It's unloved, but yet the best performing off of the lows, up over 38% compared to JP Morgan, which is the most loved, up over only 21% off the lows.
Craig, can I just say, I love Mag 7 to Lag 7. I've said it many times on this program, but if it rhymes, it is true. So Lag 7, it is. Does that also mean, you're describing the sectors here, but are what you seeing a whole-scale rotation, one where growth really led us higher in this equity market to one where value can finally shine and take the reins of the leadership?
Well, not only can you see the value, I think, pick up in here just a little bit, but when I look at a very simple ratio chart on the terminal between growth versus value, it's unclear whether it's going to be a true takeover of value at this point in time. What I think is more clear with the ratio charts from a technical perspective is that the large cap stocks are going to lag and the small mid-cap stocks are going to pick up in performance. And that's why I think as you go through the first part and maybe even into the mid part of 2024, why you get this sort of high-level trading range playing out as you see these mid-small caps pick up. So is it going to be a full rotation?
Yes, my small caps.
Yeah, I don't think it's going to be
it's my small caps. They're coming back.
It's like an evangelist's dream. You shouldn't come on this show and talk about the Russell or whatever. She just goes, I told you that on the first day of the trading year, and nobody was listening to me. She had a chart and everything. But you like the
market breadth.
Eh?
I was going to say it's going to be great for market breadth, and that's going to be a very healthy thing for equity markets as you go out through the year, an expansion of market breadth as you get more stocks participating, again, broadening out from that only 7 stocks that really drove the market last year.
Okay, there is a whole world beyond the 400, before the 7, and there's 493 of them. Okay, well, we'll leave it there. We'll keep an eye on the banks, and of course it was Mike Mayo who evangelized about a tripling in the value of Citi. He believes in Jane, even if the rest of the analysts prevaricate at the moment. Piper Sanders, Craig Johnson, thank you very much for being with us. Coming up, we'll take a look at some of the market-moving events that set the agenda for you. 24 hours out from CPI. What is on the agenda? Yields drop, stocks pop up by 0.1%. Meager. Good morning.
most about your economy and Greece? When you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This is Bloomberg.
It's Bloomberg Brief. Danny Berger in London, Manish Krani in New York. All right, let's get you set up for your trading day this Wednesday. Here's a look at what's ahead. First up, Bank of England Governor Bailey testifies to Parliament. That's at 9:15 a.m. Eastern. Then in the U.S., we get some data. We have wholesale inventories at 10 a.m. Then New York Fed President John Williams will be speaking at 3:15 p.m. Plus, Republican presidential candidates Ron DeSantis and Nikki Haley debate in Iowa at 10 p.m. Eastern. But Manis, let's be honest, the event we are all waiting for is the deadline from the SEC to approve a spot Bitcoin ETF.
Yes, and this time maybe they won't be hacked on X. I mean, what a debacle yesterday. 45,661. The hack went live that they'd approved a number of people for the ETF, and then they had to obviously walk that back. I mean, it's ironic in of itself, isn't it? But it's about the flow. What scale of flow will go into these ETFs, Danny? $200,000 by the end of 2025 is what Standard Chartered say. And, that could ramp a bit higher. There is your crypto world, Danny, this morning.
Yeah, I mean, pre-market, they're falling because they did rally yesterday, again, off the back of that tweet. So you're looking at a lot of these stocks. Clean Spark down 1.3%. Marathon Digital nearly 3%. But see, this is the thing. When we're arguing how much flow goes to it, how much higher can crypto go? Isn't the rally already baked in? You can see how much it's been swinging around this decision. You could easily argue that, yes, Bitcoin can come further even though it's rallied so much. For so much of this price, it's about momentum.
It also depends, it's going to be interesting to see how quickly we commoditize in terms of the fees that are charged. Who's going to incentivize you to choose their ETF first? Is it going to be Larry Fink? Of course, he once called Bitcoin an index for money laundering. Now he sees it as being a revolutionary moment in finance. But are we really going to compete on nths of a percent in terms of the cost of picking up the ETF? So there's Bitcoin up 0.5%, 45,654. Bit of dollar yen. You like it, but you like a bit of dollar yen now, don't you?
Yeah, I do. And I think this is one that you haven't neglected it, to be clear. I personally have neglected it. You've been all over the impact of this on Japanese stocks. I wasn't, but it was last year. It was almost exactly a year ago. So it feels like forever ago. I'd be happy to go back, especially if the yen continues to weaken. This is the threat, Manis. You have the numbers, but there was slower wage growth. The reasons are stacking up for the BOJ to hold.
And that is the point. There's going to be a lot of disappointed bulls on yen, and that's a narrative that we have. I'll give you the figures. So wages are plus 0.2%. Real wages fall by 3%. That annihilates the pressure on the Bank of Japan, Danny, and that's the reason why you've got this weakness in Japan and foreigners buying the market by the most in 6 weeks.
Yeah, guess we got to take the show on the road. Bloomberg Brief in Japan. I'm calling it. That's our next destination.
if you're losing more than half the electricity you put into electrolysis, is it a viable alternative to some of those fossil fuels?
Yeah, I mean, have you heard of oil? Have you heard of gas? I mean, you convert oil out of the ground, you know, refine it, turn it to diesel, whatever you like, which is going to cook the planet. You've already lost 60 to 70%. I mean, yes, there is a conversion loss from not losing an electron going from wind and solar straight into the grid. That's why it's the lowest cost energy in the world. But there's a conversion loss. Oh my God, a conversion loss. The oil and gas sector, you know, green hydrogen's got a conversion loss. It's like putting lipstick on a pig from the oil and gas sector. You know, they have had a conversion loss since 1810, right? And remember, relative dollars, their dollar per barrel was $1,600. Let's not forget that. That's how they got going. Subsidies, $1,600. Wow, it's better than burning wood. Now the same companies stand in the road of green hydrogen and say, oh my God, it's not as efficient as us. We've only had a 200-year head start. Hundreds of trillions of subsidies, which we've swallowed from taxpayers. They should get none, and they want to do it in 8 or 9 years. You know, who would you back? I'd back us.
From New York City.
In London, in Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story. Is there the kind of upside?
I'm still very bullish for 2024, but I do think it's going to be very different to the rally we saw last year.
The broader theme we're seeing right now is there's some structural changes in the market.
I actually think it's the economic downturn that's the biggest risk that's not priced into markets.
The markets are now back to this good news on the economic front, which is causing yields to back up, being sort of bad news on the equity front.
There are times to be concerned about the outlook. Right now is not one of those times.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene. I'm Jonathan Farrow. Your equity market on the S&P 500 slightly positive. What a ridiculous afternoon yesterday was. Let's bring up Bitcoin. It's happened, Tom. The SEC says the spot ETF has been approved, and then drum roll 15 minutes later, it's a hoax.
Katie Greifeld was a saint yesterday. I was on with her on radio, and I reamed her about Gary Gensler and how upset the chairman of the SEC is over this entire Bitcoin folly we're going through. And then what, John? 3 hours later, all hell breaks loose at the SEC.
So this is what we've heard from X, Twitter. The breach was not due to any issues with its systems, adding the account didn't have two-factor authentication enabled at the time of the incident. This is pretty embarrassing stuff, Tom, for the SEC on a big issue that a lot of people in this market have been waiting to see the result of.
Let's be clear, it is a big issue, and you see this, folks, with the number of people. I think Greifeld says we're up way over 20 ETFs coming in here that will buy Bitcoin, and also the desperation to get out front on this. There's a fee war going on. John, ages ago, we had gas wars where it would be like 29 cents a gallon, and there'd be a gas war and get it down to 4 cents a gallon. Sure. That's where Bitcoin is right now.
Bitcoin just about unchanged this morning, in and around 46K. We need to talk about a better mood. This from Neil Dutta of Renaissance Macro on this program yesterday and publishing it shortly thereafter, Tom. Rest in peace vibe session. Consumer expectations are climbing as inflation is cooling. Small business sentiment hitting a 5-month high. Is confidence starting to pick up to start a new year?
Well, it's there, and you can see it in the data on the screen. We're going to do a data check here in a moment. John does it better than me. 12.83 on the VIX is all you got to know about it. Buoyancy in the market. Again, we see it today with the NASDAQ green. I mean, the drawdown on this crushing, difficult January we're having on the Dow Jones Industrial Averages, 0.5%.
I know.
It's a pullback.
I know. No drama. Let's get to the scores. On the S&P 500, just about positive on the S&P. We are up by 0.1%. Yields are coming in a couple of basis points. 3.9886 on a US 10-year. The euro, a little bit snoozy once again, 109.50. That currency pair positive by 0.16%. Tons to look out for through the day. Let's get to the brief this morning. The Fed speak, TK. John Williams 3:15 Eastern Time. We've got Mester, we've got McKee sitting down with her. You've got Kashkari coming up a little bit later in the week.
In the last 24 hours, Howard Marks' annual letter and Kenneth Rogoff out front of your Davos, John, with a blistering Project Syndicate essay that rates are going to stay higher. Well, John Williams discussed that. John Williams says rates are going to come back down to some form of where we were before COVID. And people like the investor Howard Marks, the academic Kenneth Rogoff say you're wrong.
The week really begins this afternoon with that speech from the New York Fed President John Williams, and then it's about the data tomorrow morning. CPI 8:30 Eastern Time onto PPI on Friday. TK, I know you've had this circled on the calendar for the last month.
It is. The dynamics of this is going to be interesting. I'm going to go to the land of Rosenberg, which is he slices and dices it up and looks for trend. And I guess you got to go back to the tried and true, John, which is what is the vector on service sector disinflation? There's been some good news there. Will we continue to see that, or is it going to be all about goods deflation and the imputed disinflation and deflation we're seeing out of a weak China?
And once we get through the numbers, TK, we're going to be talking about the earnings, the big banks on deck. This Friday, you're going to hear from JP Morgan, from Citigroup, from Bank of America, from Wells Fargo, all reporting, Tom, to close out the week and take you into the weekend.
This is a huge deal. On radio, you're seeing 1 year JP Morgan up 23%. That's not what banks are supposed to do. And John, it's real simple here. The zeitgeist and Gino Martin Adams of Bloomberg Intelligence, among those leading on this, is, you know what? It's a pretty grim view out there. Ben Laidler, I thought yesterday was great on this when he wasn't vamping on BitDog. And the bottom line is there's some worthy people saying this could be better than good.
Let's get the conversation started this morning. Good morning to you all. We can do that with Russ Kostrick, Global Allocation Fund Portfolio Manager over at BlackRock. Russ, good morning to you, sir. It's great to catch up. I know you went overweight stocks last year. Let's talk about what you're doing just around sectors, paring back some of the exposure to big cap tech, mega cap tech. Russ, why is that?
Good morning, Jonathan. You know, we still think the market can move higher in 2024. We do think it's going to be a little bit of a different year from last year, which was characterized by an enormous gain and a very narrow market. So this year, probably more muted gains, but a broader rally. So we're thinking about what are the parts of the market are cheap, which were left behind in 2023. That includes areas like energy, some of the industrials, some of the healthcare. So it's not as if that the long-term themes around big tech have gone away. They haven't. We still think this is a sector you want to be overweight, but maybe use some of the overweight that you had last year to fund opportunities in some of those value areas that are really looking cheap in a market that most people view as rather expensive.
Russ, what's the overall animal spirit, the underlying nominal GDP that's going to drive this economy forward?
I think it's about 4.5%, which is an important number because, you know, one of the things that happened last year that buoyed the market was that earnings held up. And they held up because nominal GDP held up. If you think about the year we're looking at in 2024, let's call it 2% growth. Maybe inflation normalizes back to 2.5%. That's 4.5% nominal GDP. Well, that's a year where you probably can hit or maybe even exceed the 10 or 11% earnings growth that's baked into the market. Right. So I think when you ask why is the market going to go higher after such a spectacular 23, I think that's the main reason.
Russ, what are you seeing with cash right now? Do we wait to see the money market fund trillions move, or is it happening right now?
You know, I think it's starting to happen, but, you know, it is such it's a trickle, and it's something that's going to take time. You know, people, you know, Tom, as you know, for the first time in 15 years, we're able to sit out in cash, get a decent return. Today, not only is it a decent nominal return, it's a decent real return. So when I speak to advisors, when I speak to clients, that money is coming out very, very slowly. But as we get into the middle of the year, as we start to see the Fed begin to lower rates, I do think you're going to see more flows into spreads, into equities, into assets that are going to maintain that yield in an environment where rates eventually are going to start to come down.
Russ, I didn't hear go into bonds. You're still underweight bonds. Russ, why is that?
Well, we are, but it really depends on where we're talking about. So we are a little bit underweight duration relative to our benchmark. Most of that is on the long end of the U.S. Treasury curve, and that has more to do with the supply of treasuries. When you've got structural 7% deficits versus GDP, you've got $2 to $2.5 trillion that needs to be funded every year. What we worry about there is what is the right term premium? What is the right premium you should get for going out on the curve? However, We look at other parts of the bond market, investment grade, high yield, securitized, EM, we actually see that the nominal yield you're getting is pretty attractive. So we look at those parts of the bond market, we're actually overweight relative to our benchmark.
Just to sit on the underweight a little bit more on treasuries, Russ, are you saying that the debate that's taking place in Washington, D.C., the spending deadlines of this month and early next month are already shaping your approach to the treasury market?
You know, I'd say it's less about the technical question about whether or not you're going to get a resolution on the near-term funding. It's more about this longer-term issue. I mean, think about what happened at the end of last year. We were starting to focus on things like the Treasury's quarterly refunding announcement. The market was moving on whether or not an auction went well. It had been a long time since we've seen those type of events really dramatically move the bond market. And for the first time in a long time, particularly back in August and September and October, there was a very big debate about what is the right premium you need to own long-term treasuries in an environment where supply is structurally high.
What's the real yield going to do here? The most shocking thing I've heard into this new year, and Russ, we're done, by the way, saying Happy New Year. We're deep into we're deep into 2024.
We'll skip that part.
Was Priya Misra over at J.P. Morgan modeling out the collapse of the 10-year real yield. A lot of people are pushing against her on that. She's down to 1.00-ish%. What happens to the Russ Kosterich world if we're delivered a 1.1% 10-year inflation-adjusted yield?
Well, I think if you got down to that level, and clearly we're not there yet, and we were a long ways away from it, you know, three or 4 months ago, you know, you'd want to be more constructive on bonds. I guess my question is, first of all, when we talk about that real yield, what part of the curve are we talking about? Talking about the short end, the belly, or the long end? I think in our discussions, a lot of that debate is around the long end, and again, about that interaction between what is the right term premium you're going to need in an environment characterized by the supply we know we're going to get in the coming years.
I mean, I look, Russ, at the bond, what bonds are saying about inflation and all, and the hard, you know, the nominal GDP call, you had a 4.5% there, and it just simply implies a continued disinflation. So then circle back to the 10-year yield and frame it around 4%. What will that dynamic look like over the year?
You know, I think that's probably about right. And if we think about where the 10-year is going to trade, you know, we ended at 387. You know, I don't think it's crazy that we're going to end 2024 in that zip code. And again, that's not a bad environment. It doesn't necessarily mean that you want to back up the truck on the long end of the curve. But if you broaden that out and you think about what environment are we going to have for risky assets, we have an environment where we stick to soft landing and you get that 4.5-4% nominal GDP. Rate volatility is coming down. The Fed is lowering rates, you know, maybe modestly on the front end of the curve. That's not a bad environment to own risk, you know, as we get into the year.
Hey, Russ, great to hear from you, sir. As always, Russ Kosterich there of BlackRock. Thank you, buddy. Appreciate it. 387, 388. If you'd made this kind of call in the middle of October with a 10-year yield through 5%, and Tom a 2-year at 5.25, I'm not sure how many people would have believed him.
The gyrations, the movement, the emotions here on January 10, I think are tangible for both the bulls and the bears as well. And I would just, my answer is to extend out the timeline. Okay, so let's go through that exercise. Where are we March 31 when we get the Pharaoh outlook for 2024? Where are we on the 4th of July when we celebrate the colony's victory over the mother country? And the answer is we don't have a clue. We have no clue.
No clue whatsoever.
We're guessing.
Well, let's talk about what's priced, the dream of a soft landing and the potential of a lose-lose situation. So this came from Deutsche Bank yesterday from Henry Allen, posing this question. I think it's an important one. Raising this one, TK. With markets now pricing at a fairly rapid pace of cuts, that risk creating a lose-lose situation based on historical precedent, it probably requires a recession to get these rate cuts. Bad for risk assets. But if the economy outperforms, then markets risk being disappointed by a more hawkish outcome. Are we in truly a lose-lose situation after what we've priced over the last couple of months?
Miss Bramo, I mean, she's off curating a ski slope right now. The answer is, I'm not going to do lose-lose, win-win, good news, bad news, and that. What I'd suggest is there's just a huge amount of mystery, and my comfort, whether I'm right or wrong, is to center back a la Michael Darda or Gina Martin Adams to, okay, what's nominal GDP to underpin revenue growth? to get down the income statement. And as Russ Coster had said there, 4 to 4.5% is, it's not boom, it's not COVID, but that's a pretty darn good number.
This is what Neil Dutcher of Renaissance Macro said on this program yesterday, Tom, that real GDP of 2.5 through the year ahead, a Federal Reserve delivering some surgical rate cuts, and you can be in a decent position. Things are going to be okay. All this macro stuff is always great, just as a thought exercise. But at the moment, for the likes of Neil, he just sees a continuation of the trend. Things are going to be okay.
First time I've mentioned this, guess what's going to happen?
What's that?
The banks are going to underplay their profitability on Friday.
We got to talk about BlackRock.
Even if there's some challenge, we got to talk about BlackRock. Some real challenges there. I mean, John and Lisa are getting ready to curate Davos.
Is that your word of the day?
That's my word of the day.
Curate.
Yeah, Lisa told me that. I got it from Lisa.
Like the curator that works at the museum.
You know, you're curating the interviews, the conversations, and all that. It's great. I'm home. Vet Bill's got the flu. And, you know, I think it's going to be interesting to see. Larry Fink is such a presence at the meetings of the World Economic Forum. It's going to be interesting to see how they handle the dynamics of ESG, which has really taken to heart over the last years.
Job cuts, more job cuts announced at BlackRock. We'll talk about them a little bit later in the program. We're going to catch up with Simi Shah of Principal Asset Management a little bit later this morning in the next hour at 7 a.m. Eastern Time. From New York City this morning, equity futures just about positive. Good morning.
What does it take to be a great surgeon? This may sound trite. Perseverance, resilience, in practical terms, being able to take a blow and not having it become a permanent deformity, and grit.
The 2024 nominating contests are here, and the candidates are making their cases to voters in Iowa ahead of the caucuses. Bloomberg is live in the ground, bringing you the fastest news.
Trump is leading by a long shot.
Insightful interviews.
And at the end of the day, that's what the American people want.
And the most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
It all starts Monday in Iowa, only on Bloomberg. Context changes everything.
He was not informed until last Friday that Secretary Austin was in the hospital. He was not informed until this morning that the root cause of that hospitalization was prostate cancer. We all recognize that this didn't unfold the way it should have. Now, on so many levels, not just the notification process up the chain of command, but the transparency issue. We all recognize that. And I think we all want to make sure we learn from that.
Just absolutely stunning the last couple of days in Washington. That was National Security Council spokesman John Kirby addressing Defense Secretary Lloyd Austin's sudden disappearance and hospitalization, now learning that it was due to complications from surgery, Tom, for prostate cancer.
Suddenly, it's serious. And, you know, we don't need to do Dr. John here, but the bottom line is now we know it's serious. It always is serious. And I would suggest the tone change with that announcement yesterday. I just think there was a mystery of like, what's he in for? This.
Sure.
And jokes were made, including me. And guess what? Now we know, and it's serious, and they're going to have to gracefully figure out what to do.
Kirby didn't even try and dress it up. I think it was pretty direct.
Yeah.
I'm not sure how you dress any of this up. Anyway, Tom, still plenty of questions as to how this happens.
Oh, yeah.
Plenty of questions.
And again, it's the overlay, John, which you and I have personally witnessed in Washington, of the Biden administration, whether you're Democrat, Republican, Independent, doesn't matter. It's what is the character and tone of communication within any administration. I mean, some administrations, there's a cacophony of the Trump process. There's others where it's all from 1600. There's massive delegation. Reagan was notorious for delegating, and, you know.
You just get the feeling, Tom, we talked about this yesterday, the approach and the attitude of this administration appears to be, we're the adults in the room, trust us. We're not going to talk to you, though. But just trust us, we're the adults in the room, we can take care of this. Didn't feel very adult in the last week, did it?
Yeah. And, you know, I mean, that's the way it is. I mean, the bottom line is there's that whole trust us attitude, and it drives people nuts of all political persuasions at Washington. We're going to get a brief now, and this is really special because in Nashua, New Hampshire, there is Ward 1, 2 through Ward 9. There's a Dr. Norman Chris Elementary School, 50 Arlington Street. Matthew Bartlett knows each and every ward in Nashua, New Hampshire. He is hardcore New Hampshire and joins us this morning. Darby Field Advisors, a Republican strategist with service in the Trump administration until a certain January date. I got to go there first, Matthew, as you joined surveillance for the first time. What was it like on January 6th when you said, see ya?
Yeah, you know, thanks, Tom. Listen, it was a very, very hard day here in this town in Washington. And I remember walking home, it was during COVID, and crossing the Capitol and just seeing the utter mayhem and feeling utter disgust, and made what was just the easiest decision I've ever made in my career, which was, dear Mr. Secretary, I hereby resign immediately from the State Department.
Decisions will be made decisions will be made in New Hampshire. Matthew Bartlett, what's the tone you see right now among Republicans?
Well, exactly. It's January, and you know the business community, the country is looking at a lot of those snow-covered roads. Right now, it's not Davos. It might be Davenport, Iowa. It might be Dover, New Hampshire. And you know we are looking at what is either the beginning or maybe the end. President Trump has a significant lead. There are really two battlegrounds right now. It's Iowa, which he may have locked up, and it's a question of expectations. And then it's over to New Hampshire, the Granite State, my home state, where Nikki Haley may be putting together some puzzle pieces with her granite heels on, climbing the mountain, and may shock the Trump campaign, may shock the world. And if so, then we have a race. But if President Trump really blows it out in both states, I think this nomination might be wrapped up pretty quickly.
Well, Matthew, let's talk about that. You've been on the ground with every candidate, I believe, in the field. Matthew, do you see anything on the ground that's difficult to reconcile with what we all see in the polls?
Oh, sure. Right now, polls, you'll see a lot of national polls. Those polls are certainly, lagging indicators. It is the state polls that are the leading indicators. The nomination process is not as we know, a national election. It's a state-by-state event. And right now in Iowa and in New Hampshire, the race is not nationalized, rather it's personalized. People get to go and meet the candidates up front, hear from them directly, unfiltered, free from media, free from ads, get to ask questions, and that's really where people can make their stake. And I think that's what we see Nikki Haley do to a very high degree.
What's the number one issue that you think is attracting voters to the likes of Nikki Haley?
I think it's probably a mixture of policies of, maybe the Biden administration, whether it's foreign policy, domestic spending, inflation, that have kind of pushed people away from, their vote in maybe 2020 or away from the Democratic Party. But more importantly, looking back towards what people see as, a firmer Republican Party that maybe is absent some of the mayhem, some of the personality deficits that former President Trump has displayed for the better part of a decade now.
Matthew Bartlett, Terry Haynes visits often from Pangea, and he made a comment a number of months ago where he said there's a complete misjudgment about the number of GOP who really aren't in love with the former president. In Politico, Jonathan Martin, the headline, "Where are all the anti-Trump Republicans?" Where are they, Matthew, and are there any in Concord, New Hampshire?
Oh, certainly. If you look at New Hampshire, it is the only purple state, maybe the only swing state, in addition to being an early state. Republicans can only vote in the Republican primary. Democrats can only vote in the Democratic primary. But independents, of which there are more than Republicans or Democrats, can vote in either one. So right now, the independents of New Hampshire, those that actually decide the general election, are going to have a significant role in choosing the Republican nominee, or at least impacting that. Right now, it looks as if they're going to Nikki Haley. There is a Trump fatigue factor. In fact, when you go to her town halls, one of the biggest applause lines you hear, she's quite candid. She says, listen, polling says Donald Trump might be up 1 to 4 points on Joe Biden, but I'm up 17 points. So I think a lot of strong conservatives look at that as a resounding, rationale for her candidacy, and a lot of independent voters, find her to be the Goldilocks candidate.
What does President Biden need to do to garner those GOP disaffected votes? Does he need to communicate with them like he's communicating with the Pentagon?
Yeah, I think communication's a good start. Putting priority that you see, you hear, you listen to those, that it is a warm place. Maybe some of his policies have been rather progressive. He's been, for the past 4 years, really attuned to the left wing of his party. Now, as we turn a corner into a potential, general election, he really needs to make sure that that coalition that he built in 2020 stays with him, that they do not feel deflated. And that's from the left on certain issues, which may be a little more sensitive. Maybe it's foreign policy issues, as we're seeing play out in Michigan. But again, those disaffected voters who thought Trump, maybe they liked his policy, but they just thought his personality was just too much. Now it's going to be yet again a choosing time, potentially between Trump and Biden, and who can swing those voters right back.
Let's get to TV programming later on this evening, just to wrap things up, Matthew. 9 p.m. Eastern time, I believe. You've got Ron versus Nikki on CNN. Then you've got the former president counter programming on Fox News. What's the approach from Nikki and Ron going to be? Are they going after each other or going after the former president?
I mean, listen, it's going to be both. More than anything right now, the Republican Party wants somebody with attitude and swagger. And that is certainly why Donald Trump has had a command over the party, not just over the past few months, but over the past few years. So it is a performance. It is how you take a punch, how you land a punch, how you come back from a punch. Nikki Haley has really made her bones in this race by lighting up Vivek Ramaswamy like a pinball machine at debates. And it seems that voters appreciate that. Look for more of that tonight.
Let's continue the conversation through this month. Matthew, great to catch up. Matthew Bartlett there of Derby Field Advisors. TK on the TV programming later this evening.
Very interesting to see. DeSantis will be fascinating how he approaches the next 2 weeks.
And they approach each other and the former president. From New York City this morning, good morning to you all. Equity futures, just about unchanged.
think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion. When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Live from New York City this morning. Good morning. Here are the scores on the S&P 500, the Nasdaq. We'll take a look at small caps as well. On the S&P, we're just about unchanged. A muted, marginal move lower in yesterday's session. On the Nasdaq, doing okay. Tech actually was okay in yesterday's session as well. This morning, the Nasdaq is up by 0.2%. Tom, on the Nasdaq 100.
There's one thing out there, John, on the data that we haven't talked about, and it's off the radar. It should be off the radar. It's idiosyncratic. But nevertheless, we're going to have a milestone and a measured path to 30 Turkish lira per dollar. We are in the land of the great Steve Hanke of Johns Hopkins University. And the answer is the continued depreciation, devaluation. I'm going to say it's an idiosyncratic story until it's not. But 29.XX Turkish lira is something to watch as we go into Friday's earnings.
That's on the radar in the FX market. I'll get you a roundup of foreign exchange in just a moment. Let's turn to the bond market, the 2-year, the 10-year, the 30-year. The 2-year, really, really small moves in either direction over the last 3 days or so. We're down a couple of basis points this morning to 4.3413. We've talked a lot about how really the week begins this afternoon when you hear from the New York Fed President John Williams. Then tomorrow morning, CPI data, Friday morning, PPI data, all of that still to come. The 10-year has just been in and around 4% for the last few sessions, 399.43 on a 10-year. We're down a couple of basis points. In foreign exchange, Tom, you mentioned dollar lira. Let's talk about euro dollar. The euro really quite stable, 109.50, 109.45.
What's this Bramo show?
Positive by 0.1%.
Well, seriously, when was the last time it moved? Like 4 months ago?
We haven't had a big move for a while.
Maybe that's a
foreign
success
exchange.
for Lagarde. Maybe she considers
Things are
that.
settling down.
Yeah.
We'll hear from the ECB president next week at the World Economic Forum in Davos, Switzerland. Let's get you the top stories this morning. Under surveillance, Boeing CEO Dave Calhoun admitting the company's mistake as it deals with the fallout from a fuselage panel blowing out during a recent Alaska Airlines flight. Calhoun speaking during a company-wide meeting at its 737 factory near Seattle.
All I could think about, I didn't know what happened to whoever was supposed to be in the seat next to that hole in the airplane. I got kids, I got grandkids, and so do you. This stuff matters.
This stuff really matters. The FAA saying Boeing's instructions for checking planes were insufficient and the company will revise them. Tom, every time we go over this story, the more you get fresh details, new reporting, every single hour, every single day, the near miss that took place here.
I'm going to take
what could have been is absolutely shocking.
Oh, yeah, there's no question about that. It harkens back Qantas, I think, in Australia had some equivalencies, and there's been others, Hawaiian Air, years ago. What I'm going to do is listen to adults, and the adult in the room for Bloomberg Surveillance is Brooke Sutherland. She was lights out yesterday about the restructuring that needs to be done in this nation institutionally to get airline economics, airline safety on the same page. I'm going to listen to Brooke Sutherland.
Brooke mentioned the culture of this company as well, Tom, whether something was rotten at the heart of Boeing. It's not for me to suggest that. That's a question people are asking, though. We'll catch up with Jeffries, I think, later this hour. Perhaps that's going to be part of the conversation going forward from here. Just what is going on internally, Tom?